a step behind. I had to catch that long real quick, and all my indicators said it was going to the target. So I have to listen to my indicators, guys. That's just kind of how it works. Welcome, welcome, and good morning. Let me close my door here to the office. How's everyone doing this morning? Ron, good to see you. Haji, nice to have you back, man. Luciano, great to see you. Cav, awesome to have you here. Keeter, 8837, that's a new name. Nice to see you. RJ Muller, nice to have you in here. Alex, always good to see you. Bobby T. Indu, haven't seen that name in a while. Walter S. James Bird, man, we got all the cool kids in here today. Nice to have you guys. Man, let's have some fun today. I'm telling you, there is nothing better than being patient and then hitting your daily goal in a single trade. That's what I just did. I spent the last 2 hours sitting on my hands doing absolutely nothing, waiting for all of my rules to come together. And they finally did. And I'll be damned, it worked. So, guys, welcome. If you're brand new with me, it's awesome to have you. My name's Mark Novak. I teach you guys how to read indicators. I try to be simple. I try to be thorough. And I try to be very realistic, guys. You are embarking on a journey to become chart readers, to become day traders. And just like everything else that you've ever done in your life that was worth a darn, it's going to take just a wee bit of work to get into it. But the cool thing is the work isn't hard. The work is actually a lot of fun, and it's interactive. So if you're sitting in an office all by yourself, you got people to talk to. So embrace the idea that this is a community, because it very much is. I start my day every day. Going to forexfactory.com/calendar. I'm going to share the link with you right now. And this is just to let me know if there's any news coming out. And today is Wednesday, December 6th. And at 8:15 a.m., there was the ADP non-farm employment change. And guys, I'm not really worried about the non-farm employment change. It doesn't mean anything to me in the grand scheme of things. But I do know that there's people that may react, right? And if you were watching the S&P or the NASDAQ at 8:15 a.m., you saw it jump. So we try to avoid stepping in front of an emotional response from somebody with an awful lot of money, is the easiest way to put that. If you are one of my crude oil traders, and I know most of you are, at 10:30 a.m. crude oil inventories comes out. This comes out every Wednesday unless there's a holiday. And this is just where they talk about what's in reserves, guys. And honestly, I don't know all the things that go into it, but what I do know is that if you are a crude oil trader, and guys, listen to me here, crude oil tends to jockey for position. There are people waiting and guessing. What are they going to say? What are they going to release? Are the numbers going to be good? Are they going to be bad? And what you'll find is that people will literally jockey for position to get into, to make a move when that news is released. And you may find that crude oil is a little sketchy on crude oil inventory mornings. Totally up to you whether or not you want to trade it. But if your patterns aren't working because it seems like something is making them bump or jump, guys, that's probably what it is. So every day I go here. This is what I do when my charts are loading. I'm checking out news and I'm making sure that I'm not getting in the way of something. And then everything that I'm going to talk to you guys about today is coming from the education page. Well, I'll say 90% of what I talk about is coming from the education page. We try to make everything 100% available to you that you need to be successful with the software. It doesn't mean that there's not more outside of this page, but what it does mean is that if you focus just a little bit on the process, if you focus on the basics, you'll be absolutely floored at how much success you can find with the software. The tutorial section is where all the rules I talk about can be found. But I'm going to go to the glossary of common terms first, because I know that I have some newer folks in here. And my newer folks, this is your day. This is your day to break out of your shell and to post every question that you have, to post pictures about what you see and what you think and what you feel. And I want you to do that. I want you to be comfortable doing that. And I'm going to talk about, for this first hour, it's the same hour every day. I mean, literally, we're doing repetition to create recognition. I'm going to talk about a high probability trend trade this morning. I'm going to talk about a trade where each indicator on every chart agrees for the rules for the trade. And typically, this is when all the triggers are their strongest and there's no termination conditions, and there's no trouble spots between your entry and your target. This trade, when you execute it properly, and I'm going to teach you how to execute it properly, but this is a trade that typically wins 70 to 80% of the time under the best circumstances. This is a trade that will create confidence through the memory of success. This is a foundational trade, and that's all this is a foundational trade. If you allow this to be your first trade, it's not that this is going to be all that you ever do, but this is the trade that's going to teach you to become a chart reader. And being a chart reader is where it's at, guys. All the cool kids are doing it. But chart reading is about 90% of your day. 90% of your day is spent looking at your indicators and waiting for these advantages to come together so that you can take a trade. My 90% was very much today. I sat on my hands for almost 2.5 hours waiting for my rules to be met for a trade. Almost 2.5 hours of doing nothing, keeping myself from talking myself into trades. But when all my rules finally came together, I knew that I had a statistical advantage. I knew that I had the opportunity to take a trade that typically wins more than it loses. And that gives me a lot of confidence getting into the market. And then once I entered the trade, it just kept getting better. And my chart reading said, holy smokes, this is the best look ever, add on. And I did. And life went really well for me, guys. But you got to learn the rules first, because when you learn this high probability trend trade and you begin getting comfortable reading your charts, you're going to be able to understand three very key concepts, three very important concepts. You're going to understand where the market is likely to continue. This becomes your entry for the highest probability trend trade. These will actually become your entries for momentum trades, HVA trades, edge trades, counter trades, whatever it is you're doing. But once you can look at your indicators and understand where the market is likely to continue, you can pinpoint where it's time to get into the market. You're going to understand where the market is likely to go. And it's this outstanding combination of momentum and then using these key Fibonacci areas. I'm telling you guys, these fibs are unreal. And you'll know where the market is likely to go because of the momentum. And this is going to help you develop a plan to get the absolutely most out of each and every trade rather than stopping yourself short. But as I teach you today and I give you a plan today, I'm going to teach you how to get in and out of the market quickly so that you can get paid and begin to build and find a plan that's bringing you success early on. And then finally, you're going to understand where the market is likely to stop. And where the market is likely to stop is what we call a termination condition. And termination conditions, guys, they end the party. Termination conditions are where decisions are made. Whether it is making the decision to enter, to exit, and let's see if we can find a live market here. Termination conditions, like these one-to-ones, like this resistance that held the market up, like this support that stopped the party to the downside. These termination conditions, you'll be able to recognize them and you'll say, hey, I don't want to go short anymore. I've reached a place where the market is likely to bounce. And then you'll be able to say, well, it reversed. And I'm going to find an opportunity to go with the market, with the direction, with the momentum. And you'll be able to do it with a trade that typically wins more than it loses. And guys, this is an example right here on the S&P of exactly what I teach every day. Trading with the trend, trading with momentum, understanding where the market is likely to go, understanding where the market is likely to stop, and then waiting for the advantages so that you can get in right where the market is likely to continue. And I'm going to keep this picture up here because when we go through the entries, you're going to be pretty impressed. He didn't have to handpick pictures. He didn't have to go back and scroll back and find an example of what he's talking about. It just happened live in the market. And hopefully some of you guys caught that. So we're going to focus on becoming trend traders, guys, just in the beginning, high probability trend traders, because it's the easiest trade to learn. There's only 3 rules. Small class today. That's okay. Hey, Gail, haven't seen you in here in a while. Let me know if I can help. Um, 3 rules, guys. 3 rules that provide 3 advantages. And I want you to begin speaking to yourself as you read your indicators in terms of advantages. I have the advantage of momentum because rule number 1 is true. I have the advantage of a clear path because rule number 2 is true. And now I have the advantage of being able to pinpoint exactly where the market is likely to continue because rule number 3 is true. And it's these 3 advantages that create a trade, guys. These are the 3 advantages that create a high probability trend trade. These are the 3 advantages. These are your chart reads. These are going to open up the door for a lot of other trades for you. And these 3 advantages, they happen on 2 charts. Simplicity. I can't stress this enough. RJ, simplicity. Don't make it harder than it needs to be. Mike Lynch, good to see you back in here. Simplicity. Don't make up more than you need to have. Haji, let it be easy, brother. Because your large chart leads the way, guys. A large chart is this broad stroke of a brush. It's a slow-moving chart. It's like, I don't know, have you ever seen one of those lava flows that just kind of eats everything in its path? That's your large chart. Your large chart in 1 bar, the most current bar on the large chart, you're going to be able to define direction, momentum, and areas. That's a lot of information from just 1 bar, but we really let it lead the way. And your first 2 rules happen on that large chart as well. And when they're met, you will have momentum on your side. You will have a clear path. And anytime I say clear path, I mean that there is nothing between you and your target, guys. And that is an ideal situation for trading with the trend, for trading with the direction, for trading with the momentum. And then once these rules are true, and only when these rules are true, right? If the rules aren't met, let's do nothing because the statistical advantage goes away. But when they are true, you're going to turn your attention to a smaller, faster chart. You are going to refine that broad stroke of a brush. What happens in the most current bar on a large chart actually happens in probably about 15 to 30 bars, depending on what's going on a smaller, faster chart. This is my refinement picture. You can see on the left side, the large chart, I've put a square around just 1 bar. All of this information on your smaller, faster chart is contained inside of this bar. This is how we refine to get to our best of the best entries. And you're going to be able to pinpoint right where this circle is, where the market is likely to continue. And guys, that's rule number 3. Rule number 3 is designed to get you in with the least amount of risk and the absolute highest profit potential. And we're going to just focus on this one. First hour, we're going to talk about it. We're going to look at examples of it. We're going to break each rule down individually so that it becomes easy for you to recognize when the market is moving. And I'm going to give you the path. And I give this path every day. And I'm going to tell you through my experience and through my own personal journey with the software that this path gets ignored heavily by new users. This path gets ignored because it feels like work. And nobody wants to work. Everybody just wants to be rich, right? Guys, it takes, what does it take to become a doctor? 10, 12 years? Probably takes 5 years to become an engineer before they ever let you think about building a bridge. Nursing school is 4 years. To be a teacher, it's 4 years, guys. Everything is a minimum of like 4 to 5 years of study to begin to get into that remedial point. You're not going to have to go that long, but I want you to remember that it is a path and you're growing from zero to confident trader. And the easiest way to do it starting off is, guys, post your trades in class. Everything that you do, post it in the room. When you downloaded the software, you got TechSmith Capture. If you go to your search bar and you type in TechSmith, TechSmith, TechSmith Capture, guys. This is it right here. This is how you and I have a conversation. This is how you and I are going to talk about anything and everything that you see. And it's really pretty simple. We're going to take a picture together. This giant red button says Capture. When I click it, if I hover over just one of my charts, it'll take a picture of one of my charts. But remember that we take 2 chart trades, right? Large chart, small chart. So left click in the upper left-hand corner and drag it all the way down to the bottom right. Make sure that you get your timestamps. Make sure that you get your prices because we're going to do a comparison on the two charts. Once you release your mouse, it's going to ask you to capture the image. And I'm going to tell you guys right now, if you find yourself breaking your rules lately or having a challenge, do the same thing, but capture a video and talk yourself through one of your trades. You'll be amazed at what you say. Capture an image, and it's going to give me what we call the capture image preview, guys. And this is how you and I have a conversation. Absolutely, Collie. And remember what opinions are like. Everybody has their own opinion. And there's a lot of ways to look at things. But always ask questions in here, no matter what you're talking about. Guys, there are arrows, call out, shapes, highlights. The arrow is going to point out things that you want to bring to my attention. The call out is where you're going to have a conversation with me. You're going to left click and drag it down. And this is where I want you to say, this is rule 1 being met. This is strong triggers, right? Let me know what you're looking at. Let me know how it associates to your rules, maybe the advantages. Point out maybe termination conditions, right? Point out your entry. Use the language from the rules. Pull back to an area inside of favorable large triggers, right? And what you're going to do is you're just going to really annotate a chart. You're going to say, hey, Mark, this is what I saw. This is what I did. This is where I did it. This is where I exited. Can we talk about how to do it better? Or maybe just get a virtual high five because you did it so well. Once you have this information on here, click the copy button and then bring it right over to class and paste it into the room. If you're in the pop-out room, you need to hit Control V. If you're not in the pop-out room, you can just right-click and paste. And then, guys, that's where the second half of the classroom comes, is we start talking about all these pictures that you guys put in. We start talking about advantages. We start talking about the trades that you're taking. We start talking about all these different things. The next thing you can do is click the upload button. And this is going to send your picture to the cloud, the screencast cloud. And it's going to give you a link to the picture. And if I click copy on the link, I can drop that link in the room. And that's awesome. I like it when you guys drop the links. It gives me a very clear picture. But that link is going to go into the second half of your path to becoming a confident trader, where you use that spreadsheet for your real-time performance. And guys, here's a copy of my spreadsheet, and there's a tracking page on here. And that same link that I just put in the room, I'm going to drop right in here. This was our trade, guys, and we took it today on the 6th of December. And what type of trade was it? Well, it was a trend trade. It was a 50-50 trade, actually. And how did I feel? And guys, how you feel has a lot to do with where you're at with your rules. I felt nervous on that one, right? Whew. How was my top and bottom? I had a strong, and we're going to talk about that. I had a termination that created a reversal. And I'm going to go through this. And then when I get feedback, I'm going to put the feedback over here in the notes section, because over here is this is what I'm going to look at tomorrow, guys. And when you talk about this path and you use the spreadsheet, it's that trade tracking spot that you're going to come back to each morning. What did I do yesterday that worked? What did I do yesterday that didn't work? What made me feel relaxed? What kept me nervous? In this little brief historical study each morning, pour your coffee, go through. It'll take you 3 minutes. It's going to prepare you for the day. What are you going to do today to be a little better than you were yesterday, right? Maybe yesterday you found yourself fearful of missing trades, so you made bad decisions. You're going to take a giant crayon on your piece of paper in front of you, and you're going to write down, I'm not going to be fearful today. I'm going to wait for my rules to be met. And guys, I'm telling you, everybody in this room wrestles with that. And it will accelerate the learning. So when we talk about to getting to where you want to be, there's an easy way and there's a hard way. And I can tell you that I've done both of them. The easiest way is post your trades in class. Guys, every trade, win, lose, or draw, tell me why you did what you did. Show me where you got in. Show me where you got out. And together, you and I, hand in hand, are going to work to get you to the best entries with the most advantages so that you can find the success that you're looking for. Our first hour, get over here, pictures. is dedicated to learning the trigger line and the Fibonacci rules for when it's okay to trade. We're going to talk about each rule for the high probability trend trade. We're going to break them down individually. We're going to look at them visually. We're going to find examples in the live market. We're also going to look through historical pictures. I want you guys to simulate. I want you to pull the trigger every time you think there's a trade. And I'm going to tell you right now, winning feels good. But if you win and the rules are wrong, that short-term victory typically leads to long-term failure. If you're just jumping in and jumping out for no reason, trying to become a simulator millionaire, that success rarely translates into the real world. It's like they have cameras on you. So I want you practicing the correct rules. I want you focusing on the advantages, focusing on the process, and don't worry so much about the results in the beginning. The idea now is we are going to stockpile pictures. And we're going to break it down and weed it out and sort it out until we get to your absolute best of the best. We're going to simplify today very much. We're going to talk about high probability trend trades, and we're only going to let them have 3 rules. I know that sounds silly. He's only going to let me have 3 rules. That's it. Because what you're going to find is you're going to start creating rules that you think are bringing you advantages, and you're going to do that without study. And I see it all the time. People start talking about colors that don't make a difference. People start talking about a divergence here or a trigger line there that doesn't make a difference, that has absolutely no bearing on the trade, but they'll use these micro rules to justify breaking one of the big ones. So keep it simple, guys. Keep it 3 rules on 2 charts initially. And this is where you need to figure out what looks you're going to commit to. And you've got to learn those looks so they become easy. And guys, this is the second page of your spreadsheet. These are your looks. When you go through and you drop a picture in the room and you say, hey, Mark, this was my long trade and I had odds favorable momentum open up there. And I had a clear path. And I took this entry right from the area inside. Mark, this is what I'm looking for, right? This is that high probability trend trade. And I'm going to say something clever like, RJ, that's freaking amazing. Why don't you drop that one into your spreadsheet? Because this is the look that you're going to commit to. This is the look that's going to get you paid more often than it doesn't. This is the look that's going to create confidence. And this is my long. This is my long trade. And if you start doing that every time, what happens is recognition becomes easier. And then we get to the third section, guys. This is the client trades. This is the one that I've compiled personally for you guys. This is about 260, 70, 80, something around there, pictures of people finding success with the software, embracing the advantages, taking the great entries, getting that momentum, that clear path. And I just stole them from the classroom and dropped them right in. And I'll probably do that today a little bit. Some of you want to trade NASDAQ. I've created a section for you guys from my own personal study on the NASDAQ if you find it helpful. There's ideas to manage these trades. There's ideas of patterns that repeat themselves daily. There's a lot on terminations, but your job on your journey is to make your pages look like my pages, is to make your page filled up, ready to go the same way my page is. And I took a picture this morning, and let me see if I can find it. And this is for you guys that have been with me for a little bit. How many pictures do you have? Do you guys keep tabs on that? Can you see it in your files? I've taken 10,000 plus pictures in the last couple of years, guys. Easily 10,000 plus pictures. I probably take 30 or 40 a day. I probably take 5 pictures per trade. I snap pictures for the entire trade, and I go back and analyze things. My brother is well over 31,000 easily. He's probably up to 32 now with all the study he's done. I've got little side folders of specific trades that I'm working on. And I want you to ask yourself, if I put you on the spot right now and I said, hey, could you show me 25 perfect longs and 25 perfect shorts? Would you be able to just go straight to your spreadsheet and copy off 25 of them and say, here you go, Mark. This is exactly what I'm looking for every time I'm looking to get in the market. Here it is long, and here it is short. Because if you can't do this, then you're hurting yourself. Then you're not giving yourself the advantage of study. You're not creating that recognition. So guys, I made this picture this morning because I want to remind you that pictures will slow down the market. A market that appears to be moving fast moves slower when you know what you're looking for. A market that appears to be chaotic seems calm when you know exactly what it is you're looking for. And once you know what it is you're looking for, it becomes easy to repeat that process. And that's what we want, is we want repeatable, easy recognition. So we're going to do that this morning. We're going to go through, we're going to do 3 rules, going to do it on 2 charts. And the reason we do 2 charts, guys, that large chart's the large crowd. The large crowd is going to move the market. You can't compete with the large crowd. Unless you are some anomaly in here trading millions of dollars as a brand new user, you can't fight the large chart, guys. You don't have a prayer. So it makes more sense to just do what they're doing, right? It's like peer pressure. They say up and they say momentum and they say there's nothing in the way. Hell, I'm going up with them. And then we use that small chart because there is a small crowd, and most of us are a part of the small crowd initially, where we fight trigger lines, where we fight trends. And guys, they get Nexgen users back to their perfect entry in that refinement process. So that's what we're going to do today. We're going to take 3 rules, guys, and we're going to start with the high probability trend trade. Rule number 1, large chart. Remember, the big chart leads the way. We have to have strong triggers. Why? Because strong triggers provide us momentum. That's our first advantage. The only way to have strong triggers is with the direction. If the background on your large chart is green, it's going up. We should be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, we're going down. Only looking for rules to be met for high probability trend trade short. Guys, I'm going to put you on the spot. New users, I want you to do this. Don't be shy. This is the S&P. Should we be looking up or down? Guys, help me out here. This is the easy. This is the gimme. What do you think? Haji says up. Haji, you have just eliminated like 50% of the mistakes that the average new user makes because you're going to go. Brian, absolutely. What about crude oil? Should we be looking up or down? And I'm going to tell you guys right now, the people that participate, the people that post, you're the guys that hit your goals sooner. So I can pick out who's going to get to where they want to be within the first day. Whoop, it just went down, didn't it, Cav? There's never a neither. We're only talking colors. So guys, you were right. It was up. And then Mike, it showed you down, right? Isn't that cool? You're watching it live. And there's no rules, Matt. But if it's blinking back and forth, that's a pretty good sign. And then once again, guys, this just says up. I'm looking for up, but the rules have to be met. And that's it. It's likely, it is transitioning right now, Brian. If I go back to it, we were thinking up, but the market's trying to push down. And when we talk about termination conditions, you'll see why it's too soon for a short and why there's no way we would have ever taken a long. And that's why Cav said neither. Cav went a little next level on the chart reads. He's starting to piece those advantages together right now. And the one that he's piecing is odds favorable momentum. He's piecing those strong trigger lines. So we define the direction, and then we make sure that we have the triggers that we need to give us the advantage of momentum. And strong trigger lines, guys, let them be an absolute for you. You will find that strong trigger lines break areas. They're not guaranteed to, but when areas break, it's because of strength in your trigger lines. When the market continues in the direction of the trend, it's typically because of strong trigger lines. When you're holding for bigger moves, it's strong trigger lines that let you know that it's okay to hold for that bigger move. So in an uptrend, when everything is green, your small triggers, these solid lines, they have to be green. Your large triggers, these dashed lines, they have to be green. And when the smalls break above the large and they create separation, and I'd like you to close your eyes and picture scissors, and you just open the scissors. They're ready to cut. That separation, that opening of the scissors lets you know that you have a strong trigger line. Good morning, Jose. And when you have strong triggers, The odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a key phrase that you're going to hear in class all day long, guys. Odds favorable momentum. You're going to see it annotated OFM. Odds favorable momentum lets me know that this market is likely to continue in the direction of the trend. In a downtrend, your small triggers are below the large triggers. The space is created. Everything is the same color, and they are wide and angled in the direction of the trend. The odds are favorable for the market to continue in the direction of the trend. Guys, odds favorable momentum leads the way. This is rule number one. Is everybody comfortable with that? And once again, my triggers are down, but my background is green. There's no way I can have odds favorable momentum. Let's go to the next one. My smalls are below my large are wide, they're angled in the direction of the trend. Give me a Y if you see it, guys. This is a market that's likely to push in the direction of the trend. And look how it came from one of those key areas. Pretty outstanding, right? Stopped on a dime. You're going to be able to recognize that. And then the smalls are returning to the large. We are actually weakening a little bit. And guys, this is rule number one. You just saw it on 3 different markets. Odds favorable, the market's likely to push. And then the other side of that is weak triggers. When the smalls return to the large, when they work their way inside of the large, when your scissors close, you lose momentum. The triggers are weakened. Anything can happen up or down. And guys, this is a trend killer. This is a trade killer. This is just forfeiting momentum, and you begin to hope. It's a crapshoot, guys. And what you're going to find is that with odds favorable momentum, it is the most favorable look for buying Fibonacci support on that smaller, faster chart. Your large chart looks like a tail. Your small chart is 15 to 30 bars where the small crowd pushes you. You're going to pinpoint right where the bottom of this tail is most likely to continue, right where that tail is likely to form, right where these tails are likely to form by using that smaller, faster chart. But rule number one has to lead the way, guys. Rule number one has got to set the tone, because when there's separation, it's likely to push. And when they weaken, anything can happen, and it precedes a reversal very often, especially at key Fibonacci areas. From a reversal, if you get odds favorable, there's your tail, there's your entry, off it goes, all the way to weak triggers. It reverses, odds favorable. And then we get to the transition, guys. And this is what you were looking at on crude oil. If the background is green and your triggers are red, you can't have odds favorable momentum. If the background is red and your triggers are green, you can't have odds favorable momentum. This is going to make it easier for you to recognize when this rule is met. If your large trigger is red and your small trigger is green, you can't have odds favorable momentum. Rule number one isn't met. This is where people try to predict. This is a transition phase, guys. This is where, and Brian, you use the exact words, right? This is where the buyers and sellers are fighting. This is where the people that control the market, not you, are trying to determine who's going to win. Is it going to go up or is it going to go down? Nexgen users don't ever have to get caught in that fight, guys. You don't have to jump in the middle of that bloodbath. You can say, rule number one isn't met. I'm going to sit on my hands and I'm going to do nothing until this fight ends. And they provide me odds favorable momentum. But this is where most are tempted to predict. And guys, we're all guilty of it. I guarantee it. I'm going to put my hand up right now. We are all guilty of trying to predict where the market will go. We're all guilty of trying to hope, to wish, to want, to pray that it does exactly what we want it to do rather than what it's telling us it's doing. If you learn to avoid these transition phases, this is going to eliminate an awful lot of problems that you could possibly have. So, guys, that's rule number one. That's strong triggers. Strong triggers should lead the way. Strong triggers break areas. Guys, look at how strong they are, and look how it smashes through Fibonacci resistance. Look at how strong they are, right through support to the next level of support, right through that divergence high. And guys, you see this all day long. So the advantage of momentum gets things going. The advantage of momentum sets the tone, guys. It gets you focused on a market that's likely to continue in the direction of the trend. Well, then we have to make sure that we don't run into one of those key areas, that we don't hit a termination condition, an area likely to stop the market. There has to be room to your profit target, guys. And termination conditions are nothing more than lines on the big chart. That's it. And there's a few specific lines that we look for on the large chart, on the chart that defines these areas. We're looking for divergence high lines. And a divergence high is this cyan line that prints from a pivot. When I say pivot, for my newer users, I mean the market went up and then it went down. If this divergence line, this magenta line, prints from a high, it means essentially that the sellers stole the momentum from the buyers. That's all it means. It's just a loss of momentum. If you see a cyan line print from the pivot on the low, that was hard to say. It means that your buyers stole the momentum from the sellers. That's all it is. It's just a loss of momentum. We're going to use these lines in the sand created by the loss of momentum as potential termination conditions, areas that may reverse the market. We're also going to look for red Fibonacci resistance. We're going to look for blue Fibonacci support and yellow 1-to-1 dots. And guys, this is your roadmap. New users, this is what you're looking at on the large chart. And then all we have to do is embrace a very simple recipe to determine whether or not we've reached a termination condition. And I want to say NASDAQ put in the absolute perfect. Holy smokes, it sure did. If price reaches an area, we're just going to use the live market for this one. If these dynamic Renko bars reach Fibonacci resistance as they did right here, all you have to do is ask yourself, let's turn this into a study pick. I'm going to go through the two-part process for you guys right here. We're going to create a new picture for my spreadsheet. If price, and that's your dynamic Renko bars, because all they are is a reflection of price, reaches an area, support, resistance. This is the first step. Price has to reach the area. Those dynamic Renko bars have got to reach the area because these areas are where decisions are made. So when price reaches the area, you have to do the second step. All you have to do is ask, where are my triggers? If they are below resistance, no longs. If they are above support, no shorts. And guys, this really is the easiest recipe. Price reaches Fibonacci resistance. The triggers remain below. We're not going long into this area. Decisions are being made. The buyers may be taking profits. The sellers may be taking over. And then right here, price reached Fibonacci support. In the moment, we have no idea what's going to happen. Is it going to bounce? Is it going to reverse? Is it going to create a reaction? So we sit on our hands and do nothing. And guys, this is the most basic recipe for understanding where a termination is, where the market is likely to stop. And if you scroll back on your large chart and you begin looking at it, you're going to see a lot of instances where these lines stop the market and create a bounce, where these lines stop the market and create a full reversal. And a lot of the biggest moves that you see in the market come from these key areas. You'll be able to recognize where the market is likely to stop. And sometimes you'll be able to use that same momentum to understand where the market is likely to go. And when you get to an area, you have to wait. What's going to happen? Is it going to bounce? Is it going to break? Is it going to reverse? And you can see the bounce in the tail that happens off of support. Is everybody comfortable with the simple recipe? Price reaches the area, and if none of the triggers break through, sit on your hands. There may be a reaction. Guys, that's the first part of termination conditions, is first understanding where we shouldn't trade into. And then once you've defined an area that may stop the market, we want to know when the path is clear. When is it okay to take that trade? Well, if I reach Fibonacci resistance and none of the trigger lines break through, I'm sitting on my hands and I'm waiting to see what happens. If both the small and the large triggers get to the other side of the area in question, the area is now broken. You can see that resistance behaves as support. No triggers broken, no clear path, small and large through, the path is clear. Here's a picture, termination conditions at a high. Price reaches a divergence high, none of the triggers break. Guys, there's your recipe right there. From a high, from a low, it never changes. And as long as your price has reached an area and your triggers haven't broken, guys, you forfeit the advantage of a clear path. Rule number 2 is not met. It can't be a high probability trade. But I told you we're going to introduce you to a medium probability trade. We're going to talk about one more trade, guys, that uses that amazing momentum, that uses our recognition of areas. And this is what we call a 50-50 trade, guys. If 50% of my trigger lines smash through the area, and I mean smash through the area, and 50% haven't made it yet, with odds favorable momentum, this area has the potential to break. With odds favorable momentum, the market may push through this area. It's not guaranteed. It's not 100%. But with the potential, there may be a trade opportunity. There may be a tail. There may be an entry on that smaller, faster chart that gets you into the market with the potential. Because it's not broken, it's not a clear path. And I'm going to put this picture in the room as well. And if it's not a clear path, simply going back to advantages. If it's not a clear path, it can't be a high probability trend trade, which means it's probably not likely to win 70 to 80% of the time. It means that it's a little more aggressive getting into it, that it has to be managed a little more aggressively, that it may not be a home run trade. So guys, that's going to be your first medium probability trade that we talk about. But I'm going to get back to focusing on the high probability. Look at that. Price reaches Fibonacci support. None of the triggers break through. Guys, give me a Y in the room if you're seeing it right now. Price reaches yellow 1-to-1s. Not one trigger breaks through. There's 2 textbook termination conditions, and both of them yank the market the other direction. You guys have the advantage of knowing where these areas are. You're looking at the exact same areas that the people that move the market, the people with deep pockets are respecting and recognizing. That's one of the most amazing advantages that I think you could ever have. So let's review. This is a pivot with a loss of momentum. This is not a termination condition because the recipe is price reaches the divergence low. If all the triggers remain above, no more short trades into the area, guys. Just do nothing. It's easy. Stand up, walk around, breathe deep. This is a termination condition that we call a pivot stop out. And a pivot stop out just means that the pivot was made and divergence showed up. And then everybody that tried to go short into that termination condition got stopped out and the buyers took over. So pivot stop outs can be very powerful, guys. They can reverse the market. And the cool thing is if this pivot stop out reverses the market, if a termination condition reverses the market, we're going to deem this a strong bottom, a good bottom. And a good bottom is the precursor for the highest probability trend trade long that you can take. And these pivot stop outs become more powerful when they couple with those key Fibonacci areas. And this is a great example of how 90% of your day is spent reading indicators, guys. Price reaches resistance and none of the trigger lines break through. Don't go long. You know to not go long. Your rules say don't go long. Don't let hope take over because look at the bounce. And it bounces all the way back to Fibonacci support and all of your triggers remain above. And some of you say, but the triggers are red. But the background is red. But the momentum is there. Mark, I have to go short. But rule number 2 said don't do it. And then it comes back up to resistance, 2 forms, and a divergence high. You get a pivot stop out at 2 forms of resistance, guys. No longs here. And I want you to see what happens. This termination condition reverses everything, right? Triggers go red, background's red, separation is present, price has not reached Fibonacci support, and there's your tail. Your patience paid off because this is the entry for the highest probability trend trade that you can take. This is a trade that typically wins 70 to 80% of the time. What you do when there's nothing to do is going to dictate how much of this profit you get to keep. And then I'm going to show you one more picture, and I'm going to vandalize this one a little bit because I like the visual. And this reminds me, guys, I'm not in charge. I have absolutely no influence on this market. These guys are going to do what they do. Your sellers started off and they were screaming to the downside. Look at that momentum. And I'm saying to myself, this is a market that's likely to continue in the direction of the trend. But then it hits yellow 1-to-1s. And when it does, none of the triggers break. So I put a paper clip on the chart. How about a stop? And rule number 2 tells me, Mark, no matter how much momentum is present, no matter how much you wish you were in a short trade, don't do it because you don't know what's going to happen. And look at the push that comes off of that termination condition. This would have stopped me, you, and everybody out. But this doesn't mean that the market reversed. And I want you to see the fight that happens at this decision-making point, guys, from up, down, up, down, up. This is the 90%. This is where traders lose accounts. This is where traders get frustrated. This is where traders say, this is bullshit. I'm never doing this again. If you respect rule number 2, you never went short. And the cool thing is you never went long because your trigger lines never got above resistance. You got caught in a range, but you didn't get caught trading in a range. Eventually, this termination creates the reversal. It's now a strong bottom, and this is the precursor for the highest probability trend trade I could take. Eventually, the smalls get outside of the large. Small and large get above resistance. It's now behaving as support. And there's your tail, guys. There's your entry. This is your 10%. This is what you have to believe is coming. And when you believe, when you trust your methodology, when you believe in your rules, when you've practiced these and you've seen them, and you believe that this 10% will show up, it's easier to avoid the 90%. When you believe that this is the one that's going to bring you profits, it's easier to avoid the ones that are iffy. And it takes a while to develop this trust, guys. So it's okay to remind yourself every morning, 90% of my day is going to be doing not a darn thing. 10% of my day is going to be taking advantage when all of my waiting pays off, guys. Is everybody good with termination conditions? Using the large chart, guys. The large chart defines areas. I want to say that 18 more times just to make sure that you're comfortable. The large chart defined your direction. The large chart defined your momentum. And your large chart defines your areas. Notice that I didn't say large chart defines your termination conditions. Large chart defines your areas. Because there is one termination condition that isn't going to happen from hitting a line on a large chart. And it's going to use your smaller chart. It's going to use your entry chart, guys. And you're going to be able to use divergence, those losses of momentum, to identify when the market seems to be turning from nowhere, even when the conditions look perfect for a trade. And this is the final termination condition, and this is the only termination condition on a small chart. Lines on a small chart are used for entry, but 3 divergences on a small chart may terminate the trend. 3 losses of momentum in the same price range may terminate the trend. This becomes more powerful when your small triggers work their way inside of large triggers, that anything can happen, look. And it becomes more powerful still when your final pivot is higher than the previous from a low or lower than the previous from a high. It creates a head and shoulders pattern, which doesn't mean much to me because I've never traded technical patterns, but visually I can see it and I know that it adds strength to this potential bottom. Guys, you're going to see this look at a low or this look at a high. When your slower, faster, large chart can't give you that information quickly enough. So you may see 3 divergences even with odds favorable in a clear path, and it lets you know don't take that next short or that next long. Or the same thing at the bottom, guys. And you're also going to be able to use these 3 divergences as you expand into other trades. Because if you are in the perfect short trade, if you got in at that area inside of favorable large triggers and 3 divergences print, well, this is a giant red flag saying stop hoping. Things may change. Take your money, wait for the next great example. Same thing at a high. And guys, termination conditions are probably the most broken rule in trading. But I want you to see this. With all that odds favorable momentum directly into Fibonacci support, look at the 3 divergences that printed right at that same area, and look at the reaction of the market off of that area. And now price comes back to Fibonacci support, and it bounces again, and it bounces off of resistance. Guys, is there any reason to ever get caught? Look at those flat triggers. Flat triggers don't give momentum. I'm telling you right now, rules and your ability to trust them and follow them are designed to keep you safe. Jose says crude oil has defined the range that it's in. And even your large chart has 3 divergences in the same location. But what this does for me, guys, and let me take the picture because I think rule number 2, it eliminates a lot of hope. I might have taken a short trade right here with momentum and a clear path, and it didn't work out. It's okay. And then it hit resistance, and I knew that I wasn't going long. And it hit support, and no triggers broke, and I knew that I wasn't going short, and I knew I wasn't going long or short or long or short. Guys, this is your 90%. Can you give me a Y in the room if you see it, Jose? Thanks for pointing that out. This is your 90%, guys. This is sitting on your hands waiting for advantages. And this pisses off people because they say, well, how am I going to make money, Mark? How am I going to make money if the market's caught in a range? It's not my fault that it's in a range. But what I've done is I've defined where that range is. So what are we going to do, RJ? We're going to let it get above the top of that range or below the bottom of that range, and then we'll start looking for rules to be met. We'll start looking for odds favorable momentum. We'll start looking for that clear path. And then when we have them, we're going to dial in that entry, guys. And that's what we're going to do right now. We're going to talk about getting into the market where it's most likely to continue. And that happens on a smaller, faster chart. That's it. Box it out, right? Draw lines where you're not trading into, if that helps you. But when it breaks out of that range and it has odds favorable momentum and it has a clear path, guys, if it's to the upside, this is what your small chart's going to look like. This is the small chart, the small crowd, the people that fight everything great that's going on the large chart. Thank goodness. And it's probably screaming to the upside. It should be if the rules are met on the large chart. Rule number 3. I want to go ahead and talk it out first. Rule number 3 says that you're going to use a limit order, meaning that you're going to be able to wait for the market to come to you. You're not going to chase price. Price is going to come to you. And you're going to use that limit order at an area. Many of the same lines that we used on a high time frame to define where we shouldn't trade are where we're trading from on the smaller, faster chart. We're going to look for Fibonacci lines. We're going to look for mid bands, and we're going to look for those yellow 1-to-1s. And we're going to insist that those areas, fibs, mid band, yellow 1-to-1s, are inside what we call favorable large triggers. Large triggers are a moving average. And guys, this is an epiphany that I've had in the last couple months. Moving averages correct themselves. If you know anything about the law of averages, they correct themselves. They self-right. So when price accelerates away from a moving average, it tends to pull back. It's just a part of life. When it pulls back to those moving averages, and there's those key areas buried within them, fibs, mid bands, yellow 1-to-1s, it behaves like a brick wall, like if you're throwing a tennis ball up against a brick wall, and it gives it a bounce point. And this is where the market is likely to continue, and this is your best of the best area. And when your large triggers and your synthetic triggers on that small chart are one on top of the other, overlapping wide in the direction of the trend, this is going to create the smallest window of opportunity, the smallest point where the market is likely to continue. When you have the smallest window of opportunity, it provides the smallest risk. So I want you to embrace the idea that you have 2 snakes riding piggyback, large and synthetic, one on top of the other, guys. These are your favorable large triggers, and you're going to pinpoint where the market is likely to continue within them. We're going to look for fibs, mid bands, and yellow 1-to-1s, but we have to let the small crowd do their thing. Remember, we're going to wait for the market to come to us at the areas, And it's going to begin to come back with a reversal bar. This is where the people that fight momentum, where the people that fight trends, this is where they give a little push and you guys celebrate that fight because hopefully it's going to push you to your area inside of favorable large triggers. So at the time of the reversal bar, you're going to define your window of opportunity, the point where the market is likely to continue. And in a long trade, it'll go from your highest point of support to your lowest point of support inside of favorable large triggers. In a short trade, it'll go, let me pull up this picture just so you guys can see it. Open up. In a short trade, it'll go from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. This is where the market is most likely to continue. This is where you've pinpointed, and this is where you're going to place your limit order, right at the top of that window. And at that point, the only thing you can do is pray that that small crowd has it in them to get you back to that area. And we're going to go through the whole sequence in one picture, guys. Your large chart had odds favorable momentum, and your large chart had a clear path, right? So rule number 1 says strong triggers. Rule number 1 says no terms. That has to be met to look for the entry, guys, because if not, you're forfeiting advantages. On your smaller, faster chart, you're going to wait for the reversal bar. You're going to be patient. We're not going to jump in here because this is a pattern that's been proven over the last 27 years with Nexgen. The market is cyclical. It goes up and down. We're going to wait for the down. And that's the reversal bar. And at the time of the reversal bar, we're going to look from the highest point of our triggers to the lowest point of the triggers, guys. And I want you to think of it this way. Don't get caught up in large synthetic. From the top line to the bottom line, this is the box where we're going to look for our areas to be. And our window of opportunity for a long goes from the highest point of support to the lowest point of support inside of favorable large triggers. You guys are going to activate a limit order right at the top of that window, a tick or two above. Because remember, the large chart is screaming to the upside. The large chart has nothing in the way. We don't expect that small crowd to get too much done. We just hope they make it to our limit order at the top of the window. And if they do, you're in a long trade with the advantage of momentum, a clear path, and an entry area. And this is your high probability trend trade. And there's some things that you have to think about. You created a window. So if it pushes to the bottom of the window, don't freak out. You're still rules-based. You're still chock full of advantages, guys. It's still at the point where the market is likely to continue. We're good, but we are not down to the tick good. Very few people are. Sometimes you will be. And then here is what I think is one of the biggest advantages of Nexgen, guys, is if you know where the market is likely to continue, you know where it shouldn't go. And this is where a protective stop gets placed, guys. And if for some reason that small crowd ate their Wheaties and they push 4 to 5 ticks beyond that window of opportunity, guys, you're going to take a loser. And losers are a normal part of a positive equity curve. You ever heard that phrase before? Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, this is a cost of doing business. And for those of you that are brand new in this room, I'm not trying to sell you something that wins 100% of the time. I want you to go ahead and resolve yourself to the fact that you will take losers. The idea is that when you take a loser, you take the right loser. You take a loser that had the advantage of momentum and no terminations. You took the loser that provided a statistical advantage, and you realize that it's just part of that 20 to 30%, that it's just simply one of those instances where the market was wrong, and it's a cost of doing business. But if you give me 20 days focused on great entries, what you're going to find is that more often than not, this is your result. It's probably going to bounce from inside of that window. It went past the mid-band and down to the fibs, right? But her stop was right where the market shouldn't go. And then it started to go in the direction of momentum and a clear path, and you're actually going to reduce your risk below that reversal bar. But 70 to 80% of the time, from a good top or bottom, with odds favorable momentum, a clear path, and the perfect entry, it's profit target reached, guys. I want you focused on this circle for the first 20 days. And you can go back and study this circle by circling tails on your large chart. When the rules are met on the large chart, when you have momentum, when you have a clear path, circle a tail. This is a historical study. We don't trade the tails. We trade pullbacks to areas inside of favorable large triggers. So we can go back on that large chart. Let's see if we can find an example real quick. Come on, crude oil, give me one. We'll circle this one and see what it looks like. We can go back and circle a tail with all that momentum and the potential to break. And let's see what it looks like on a smaller, faster chart. Not quite. It exceeded the area. This fib created a bounce beyond our perfect entry. That's okay. Let's see if we can find one that didn't. There's a termination that creates a full reversal that gives me odds favorable momentum. Guys, this pattern happened in the middle of the night where there was virtually nobody trading. And it was perfect. Right back to an area inside of favorable large triggers. And all the momentum carried you right to the termination condition. Remember what I told you at the beginning of the day, that these guys were likely to jockey for position waiting for news? News happens in 30 minutes. I'm going to let you in on a secret in consolidating markets, guys. When they consolidate like this, you're going to see this 50-50 trade, and you're going to say to yourself, man, I'm going to take it, everything's going down. I'm going to tell you just from experience, and it's not guaranteed, this is what John Novak used to lovingly refer to as the fake out breakout. The buyers let them get a little bit beyond the key area where they were holding. You guys see a 50-50. Do you see that divergence, that beginning of a loss of momentum? This is the trade, guys. It loses more than it wins. When it wins huge. But what you see a lot in a consolidating market is they almost make it, and then the opposing force absolutely rips it in the other direction. It's not guaranteed. But in my own personal trading, I don't trade a 50-50 after a consolidating market. I've already got 2 losses of momentum over here. This is just a pattern that repeats itself, and we'll come back and we'll see what it does. I have absolutely no idea what it's going to do because I can't control the market. What I can control is whether or not my rules are met. What I can control is I can go back 10 days on every market, every workspace that Nexgen provided me, and I can circle tails when rules were met, and I can make sure that it fit the rules. I'll write them on the chart, and I will submit them into the room and say, hey, Mark, I was doing some study. Am I studying correctly? Things I want you guys to not worry about, even though you probably will, and I did as well. When you're looking for that perfect trade, if price has not reached an area, that area is a target. It is not a termination condition. So this is the top of your bar, and it's a short little path to get to that target. Do you see it? It's about 6 ticks, 7 ticks, guys. And you'll be saying to yourself, I can't make much money in that tiny little range. But you have to remember that the methodology has you buying a pullback. And your entry isn't 6 ticks from that magenta line. Your entry is down here at support inside of favorable large triggers, which means the reality is when you take the right entry, you've got about 31 ticks to get to your target. This is a big question for new users. Well, I don't have room. I'm almost to a term. It's never a termination until price reaches it. It's just a target. Did it do it, GWC? And then the second thing, guys, is these small triggers on your small faster chart, this refinement chart, they're almost always going to turn against you. Almost always going to turn against you to get into your trade. They have to. That little loss of momentum to get you back to the best entry. Remember that momentum is defined on your large chart. Direction is defined on your large chart. Areas are defined on your large chart. You're only using the smaller, faster chart for an entry. And then there you go. They suckered them in, right? And we'll see. It could still go down, but the fight's not over. But isn't that an awesome pattern to learn? And you can write that down on a piece of paper. When the market's been consolidating, don't trust the first breakout. Or if you're up $2,000 or $3,000 on the day, trust it, take it, because if it wins big. That's something that you're going to have to figure out in your own plan. Guys, are there any questions about the high probability trend trade? It's a lot to take on day one. I'm not going to lie. It's a lot to take on day one. There's a reason that I do it individually. Because I want you to do it sequentially. I want you to learn it like have you ever heard the old adage, how to eat an elephant? Because the buyers and sellers made it happen, GWC. We'll go back and talk about it. Let me go through my little spiel here. And then how about if we start the second hour with talking about consolidation and fake out breakouts? I want you to learn direction first, guys. Direction is the easiest lesson ever. So if you're brand new and your background is green and you're trying to go short, you're doing it wrong. That's a pretty simple fix. The next thing is you have to couple strength and triggers with the direction, right? So first lesson, second lesson. Once you have momentum, let's start figuring out whether or not we have a clear path. Guys, these three right here will keep you busy for about 4 days, maybe 4 days. If you take a lot of pictures, ask a lot of questions, 2 days. And then we're going to refine it all down to an entry. We're going to add the second chart once we're good at what happens on the first chart. This whole process, guys, to find an entry, and somebody help me out here if you're relatively new, it probably takes you about a week to find an entry. It takes you about a week to start recognizing entries and advantages. It'll take you, depending on who you are, 30 to 300 repetitions to really begin to trust it, to believe that it's going to happen, to get in at the right spot, guys. And the more pictures that you take, the easier it becomes. The more you speak to yourself in terms of advantages, the easier it becomes. The more you write on your chart what the advantages look like, draw an arrow, the easier it becomes. Recognition through repetition. But you have to stay focused. As a brand new user, you have to stay focused in the beginning on the best of the best. We're becoming chart readers. Let's zoom a little bit. This trend trade checklist is designed to keep you focused. So RJ, Mike, Haji, all you guys, I want you to print one of these out, and I want you to put it on your desktop, and I want you to say to yourself, I'm going to commit to this for 20 days, because all this does is define an entry. And there it is in the room for you. This tells me how to get in at the best spot, because great trades create manageable trades. And then I'm going to give you the same one. You did laminate it? I love that. I had someone else tell me that they laminated it and they just got dry erase markers. So they did the checklist every time. Here's the same checklist with a visual representation of each rule, right? Recognition through repetition, guys. Go through, study this each morning before you start. Here it is in the room for you. This one can be on your computer. Open it up. Give it 3 or 4 minutes before you start your day. Make sure that you know what these look like. If you're not sure, it's your job to raise your hand in the room and say, Mark, the hell's a termination condition? And then we'll talk about them in depth. And then finally, one of the most eye-opening conversations I ever had with a Nexgen user, I was at the motorcycle races in Austin, and I met a gentleman that's been with Nexgen for probably 12 years. And we were talking one day, and you know, we're at a motorcycle race, but you still talk shop when you're with somebody that does what you do. And he goes, man, Mark, I got to tell you, he goes, I spun my wheels so hard for so long because I never had a plan, because I didn't have a written plan. I never knew exactly what it took to get me into the market. I never knew exactly how I was going to manage it once I got in there. And he told me, he goes, I was such a victim to my own emotions, and I allowed myself to be. He goes, as soon as I wrote a plan, when I physically put it on paper and held myself accountable, he goes, my trading turned around. And guys, I've had that same sentiment echoed by a lot of successful traders. A lot of people that if you own software and you're over in Traders Chat, these guys that you see winning all the time, they'll tell you that they have a plan. And if you look at their trades, you'll see that they only take 1 or 2 trades. And it's not every move in the market, it's the best moves in the market. So what I've done is I've created what's called the KISS plan, the Keep It Simple Sunshine Plan, because I can't call you stupid, because that would be ugly, right? Can't do that. So the Keep It Simple Sunshine Plan. And this plan's a stepping stone, guys. That's all it is. It's just a stepping stone. It's something to keep you focused on your path to developing your own plan. But this plan is designed to optimize your chances of success with the high probability trend trade, with that 50-50 trade, that medium probability potential to break trade that we talked about. And guys, through simulation, study, class feedback, and continuous practice, you're going to make a plan that suits your needs, guys. You're going to make a plan that revolves around the patterns that you recognize easily, that revolves around the advantages that you put together to create your trade, to create your plan. And it's all going to be based on your chart reading, on your ability to read the indicators, guys. So the simple plan for consistency, and guys, I have to read this every day and remind myself every day because I still break this one every now and then, and it costs me money every time. Never fight the large chart direction or triggers, because at that point you're just trading emotion and you're trading opinion. And if you keep that one constant in your life, especially as a brand new user, what you're going to find is that 60 to 70% of the common mistakes that traders make as new traders vanish. They're not present. If you can simply trade with direction and trigger strength, the advantages are huge. You're going to take 20 days defining your entry, 20 days studying your entry, asking a million questions about your entries, going back and back testing your entry, making sure that you can recognize the perfect entry when it sets up. And then the same way you used a mechanical approach to entry, guys, we're going to do the same thing for your first management. And then once again, the same verbiage. You will craft a plan tailored to your personal goals based on your experience reading the indicators. But your initial management plan is very mechanical and pragmatic, and it's nothing but if-then. And if you take the perfect entry, if you get in at resistance inside of favorable large triggers, if you followed your checklist, then you know exactly where the market shouldn't go. And that's where you're going to place your initial stop. And you are going to learn to accept and realize that with all those advantages, those sons of guns are going to have to come get you. You're not going to chum the water and give them an easy target. You're going to put it beyond where the market is most likely to continue. And there's nothing for you to do. It's either going to get stopped out, which is a normal part of a positive equity curve, or it's going to trade with momentum, with a clear path, bounce off of that key area and give you a reversal bar. And if it does, you're going to reduce your risk about 2 ticks above that reversal bar in a short trade or 2 ticks below in a long trade. You're managing your risk before you ever manage your profits, guys. And that's one of the advantages that Nexgen provides. And then from this point, once again, there's nothing to do. They're either going to come get you, which is fine. It's going to happen every now and then, or it's going to hit your first target of $100. Why $100? $100 because it's easy to hit with that much momentum. $100 because it's easy to hit with a clear path. $100 because there's not one person in this room that would be upset if I walked up to you on the street and handed you a $100 bill. $100, while in terms of what you think you're going to do as a trader seems insignificant, the reality is $100 is a pretty good score, and it creates some confidence through that success. It makes you feel good. The dopamine kicks, guys. Your palms dry up. Your heart starts to slow. You've got $100 in the bank, and nobody can take that from you. And you're also going to move your stop to break even, which means that not only did you just get paid, but now you've got nothing at risk, guys. And this makes it easier. This isn't designed to make you rich. This break-even stop, and it's going to get hit a lot, is designed to remind you that the large chart led the way, that you're not going to get caught up on these silly little fluctuations on a small chart. Large chart said that the market was likely to push in the direction of the trend. The large chart said that there was absolutely nothing in the way. And your small chart is nothing more than a vehicle to ride that wave. So you're going to go break even and you're going to wait. And it's either going to stop you out break even, which is probably going to happen a lot, or it's going to hit your second target. And your second target's only $200 in the distance, guys. And that $200 is pretty easy to claim with all the advantages. And you've just taken your first high probability trend trade and you just made $300. And that feels good. And if you do it once a day, that's a $1,500 week and a $6,000 month and a $72,000 year based on giving yourself the absolute best of the best. But the key is is you've got to know what you're looking for. You got to know what it takes to get you into the market. And then you have to have a plan for getting out. And I can tell you that the management is the second bite of the elephant. Entries will become easy for you, but fear is going to try and control your exits. Fear is going to try and control your stop placement. Get used to being very pragmatic with it. Don't worry about becoming rich on Simulator. Focus on the best entries and simple management. And what you're going to find is that everything works out just fine. And let's see if we can find an example. And I think Cav just took this one. All the momentum, the path is clear. It's a little unorthodox on the pullback, but there's an area inside of the triggers, and it just continues up with the momentum. And then it pulls back. Remember when I said momentum fixes mistakes? It's a termination condition, but the market still continues up because they can't seem to stop that freight train. And then if we come back, we're just developing trust. There's your 50-50 and your pullback right to it, guys. Over and over and over. And this is what I want you focusing on for 20 days. I want you focusing on entries. I want you focusing on getting into the market. Are there any questions about anything that I just covered, guys? Are there any questions about high probability trend trades? Any questions on how to take a picture, how to annotate a chart? Any questions on momentum, on terminations? No? Cool. So here's what we're going to do. I'm going to take 5 minutes and I'm going to stretch my legs. I encourage everybody, don't sit on your butt for 3 hours straight. It's hard on a body. It's hard on a brain. Get up, walk around for a second. That's what I'm going to do. And when I come back, we're going to start looking at all the pictures that you guys have posted. And what I'm going to do is I'm not going to say, oh, that's a great trade, or oh, that's a crap trade, or oh, you did it all wrong. I'm going to say, let's look at what you wrote on the chart. Tell me why you did what you did. Let's relay it back to advantages. And guys, I'm always going to look for the great, and I'm going to look for the things that may be problematic. Even on your winners, I may point out problematic things. If you get your feelings hurt easily, I want you to work through that shit. Pardon my French. Because I have to give you honest feedback. Because when you get that honest feedback, you move forward. I'm not going to tell you that it was the best trade ever just because you won. I'm going to say, holy crap, you just traded into a termination condition. Did you understand that you lost that clear path? And then let's talk about why it worked out. Let's talk about what was in favor of it and why taking that chance may have been successful. And if it was just lucky, guys, I'm going to tell you that it's lucky because luck runs out. But every trade, no matter what it is, I'm going to talk about it. I'm going to talk about it about advantages. I'm going to talk about the advantage of momentum, not coming from a good bottom. And we'll talk about that. We'll talk about your entry. We'll talk about your exit, right? We're going to go through and talk about all these things, but this picture right here lends itself wonderfully to a good bottom. Because a good bottom, Cav, is a termination condition that creates a full reversal, not just a pivot with a loss of momentum. So we get a little bit of verbiage cleanup on this one, and we'll talk about those. I'm not going to do that yet. I'm going to go take my break. But when I come back, we're going to talk advantages, guys. We're going to look at your pictures, and I want you to be very, very vocal if you have any questions at all. I'll leave you with the NASDAQ because it moves a lot, and it's a lot of fun, guys. I'll see you in 5 minutes. All right, guys, let's get back to it. Let's use this live market as an example real quick. What do you guys say we find a medium probability trend trade? And this is for you newer folks. I want you to see it. The first thing we do is look at the background color. Can everybody hear me okay? We good? RJ, you with me? Mike Lynch, Haji, you guys are all solid here, right? Cool. So here we go. Check it out. Smalls are through the area. Well, let's go step by step. Background's red. I'm looking for shorts. I'm looking for rules to be met for trades short. The first thing I gauge is momentum. So guys, give me a Y in the room if you see it. Smalls are separated from the large. The large are wide. They're angled in the direction of the trend. There's space between the two. This is a market likely to continue in the direction of the trend. Sorry about that, Rob. Small triggers are through the area. Large triggers are not, guys. These areas have the potential to break, but they're not broken yet. So what we've done is we've put ourselves in a medium probability scenario because I do not have a clear path. But we're just going to talk about entry here. So on my smaller, faster chart, everything says down. On my smaller, faster chart, smalls are below the large. I'm looking at my favorable large triggers and I'm beginning to identify. Here's some one-to-ones. There's a fib. Here's a mid-band. Where's that market going to come from? I don't know. I don't know where it's going to continue yet. And what I'm going to do is I'm going to wait for the small chart to give me a reversal bar. I'm going to wait for that push, guys. This is the exact process. The large chart doesn't blink. Small chart's doing everything. At the time of the reversal bar, my job is to look from the lowest line of the triggers to the highest line of the triggers. And that's it right there. That's where the triggers are. And now I'm going to refine that spot from the lowest point of resistance, which happens to be this mid-band, to the highest point of resistance. Well, it happens to be resistance. So this is my window where the market is likely to continue. My job is to right-click on my chart and activate a limit order a tick or two below that lowest point of resistance. And I'm waiting with all this momentum, with everything down, to see if I get filled. And the market will start to come up, and you'll notice that the mid-band continues down. And my window's pretty big. Strong triggers, no divergence. We're just going to see what the small crowd can do. And they come up. And guys, now I'm in a short trade. And I'm in a short trade with the advantage of momentum. And I'm in a short trade with the potential to break this area. And I'm in a short trade from the point where the market is most likely to continue. And my initial stop has to go up here where the market shouldn't. And that's about 20 ticks on the NASDAQ, which isn't a lot. It's only $5 a tick. It's about $100 per contract. And the market pulls up a little further. And I'm looking at red numbers, but I'm reminding myself that the advantages are there. And the market pulls up further. And I'm starting to get nervous because why isn't it going down? And it goes up, and it goes up, and it goes up. But it's still in the window. I'm not allowed to panic yet. Up, up. Oh, and look at that. Now it's going with momentum. Now it's going with direction. My risk drops dramatically. And then guys, if I'm in at 48.50, that's probably 49. I only have to make it for $100 to 44. That's my $100. That's my $100 goal right there. Let's make it green. Is everybody with me still so far? We waited for the reversal bar. We identified the window. We enter the market. We got the reversal bar, and now we're reducing our risk. Our first target is $100. Our second target will be right here at 38. Let's put one more line for targets. And let's go through the whole pragmatic, right? It's actually 39. It's $200 off because we were in at about 9. All right. There's a next bar. Congratulations. You guys are $100 richer. And your pragmatic approach says that your new stop is break even. So you got paid and you have no risk. Everybody feeling good about it? Should we worry about this line? Or does the large chart define areas? And all that momentum keeps pushing, keeps pushing, keeps pushing. And congratulations, you just made $300. That's an outstanding trade, ladies and gentlemen. This is what we do every day. This is a pattern that repeats itself every day. This is what you're going to focus on for 20 days, is being able to get in right here. And let's just, for grins, see what the market did. That was your first slowdown. Pretty cool, right? Guys, this is what we're going to do every day. This is what we're going to talk about each and every day until you become comfortable. I'm going to get my drawing stuff off of there. And now we're going to go into the second half of the classroom, guys. And it revolves around looking at your pictures. It revolves around seeing what you're doing, talking about advantages, and just seeing if there's anything that we can do better. And then GWC, what do you say we talk about? I told you we'd talk about the fake out breakout, right? What did crude oil end up doing? Look at that. They did it again. Guys, crude oil inventories right now. We'll see if it moves it. So, guys, I'm going to give you the reason. I'm going to give you the trade secret. Absolutely, Gary. I will. I'm going to give you the trade secret, guys. Oh, I hope this doesn't get me suicided somewhere in a back alley. Why does the market do things? Because someone with more money than you made it. That's it. Mark, why did the market go down from here? Because someone with a bunch of money wanted it to go down. You lost it, Walter? Like you don't even have a connection anymore? Or it just, it blinked out on you? Go to your connections and make sure that you're connected. And if not, click on your live market connection and see if it comes back. You could also try rebooting Ninja. If that doesn't work, and I hate to defer people, if that doesn't work, let Jason take a quick look. He fixes things in a matter of seconds. Oh, you let your subscription lapse. Then you probably want to get with Ninja and see what they're gonna want you to pay them. So I think that's probably going to be, sometimes it takes a couple days. So you might be dead in the water for a couple days. You could sign up for a demo account and get that simulated data. But I know when I did my my Live Ninja account forever ago, it took about 3 or 4 days to get everything going again from a new start. And they may be considering that a new start. But I would call NinjaTrader and see if you can get a demo of something so that you can at least simulate. You can. With our software, it works for sure. You bet. Sorry I wasn't more helpful. So GWC, why does the fake out breakout happen? Why does the ups and downs happen? Guys, it just happens because someone with a lot of money wants it to happen. Somebody said, I want to go short, and they dumped $10 million into the market, and the market went down. And somebody said, I want to go long, and they dump a bunch of money in. And the reality is, and I think one of the things that you guys have to realize, look at that, is that you'll never be in control of the market. And you'll never be able to predict what the market's going to do. You'll never be able to say this is definitively exactly what the market's going to do. But what you can do is you can trade a pattern that has repeated itself so many times that you know it creates an advantage. You can trade a pattern that happens so often that you know that it typically wins more than it loses. And that's what you can do. And that's why we don't say that you're going to win 100% of the time, right? Because all you're doing is you're trading a pattern with a statistical advantage. You're taking those ups and downs in the market, and the market repeats itself every day. Cav, I know exactly what you're going to show me. I saw it set up. And that's what we do is we take statistical advantages. So GWC, why does the fake out breakout happen? Because the same assholes that have been doing it for 50 years like to let the sellers think they have an advantage and then rob them. The same way the sellers let the buyers think they have an advantage and then rob them. And this is why rule number 2 is so important to you guys. Sorry. Because we've defined where they're going to be jerks. And you don't ever have to get caught up on that. All right, so Gary E., before we look at pictures, because guys, I'm always going to go to questions before pictures. Let's talk about defining. Let me go back and see exactly what you want to define, but I have a feeling this picture is going to do it just fine. Review the stop and how you determine the window. So, are you with me, Gary? When the reversal bar prints, this is where I define my window, guys. When the reversal bar prints, that's when you start making the decisions on where you want to enter. Gary, are you with me in here? I just want to make sure. This is your lesson. So we start with the large chart, always, guys. Large chart, rules met, odds favorable, clear path. Step 1 is to wait for the reversal bar on the small chart. Signal a pullback. I'm going to give you the picture. Once we get the small bar, or the reversal bar, identify your favorable large triggers from the top to the bottom, from the highest line to the bottom line. That's how you know where to look for your areas. Step 3. Create your window of opportunity. Step 3 is to create that window. From the lowest point of resistance to the highest point of resistance inside a favorable large triggers. Notice that I put that in all caps. And then this reminds you what resistance can be. Fibs, midbands, yellow 1-to-1s. From the closest point of resistance to the furthest point of resistance. And then step 4 is to put a limit order, 1 or 2 ticks below the lowest point, and pray. You've done all that you can do at this point, Gary. I'm looking inside of my large triggers. I'm using fibs, midbands, yellow 1-to-1s. I'm looking for closest to price and furthest from price. Great question. And then finally, guys, if it comes back and it hits that entry, you're in with all the advantages, and that's it. And then, Gary, to go one further, if this is where the market is likely to continue, right? If this is my window of opportunity, my initial stop is going to go above it, beyond where that market should go. And I typically give it 5 or 6 ticks because things overrun every now and then. And with all those advantages, I'm pretty comfortable putting a little risk on a trade. Does that make sense, Gary? And then if you want, I'm going to drop my spreadsheet in here one more time. Guys, this little sequence that I just went through is in the upper left-hand corner of the client trades. The management from the KISS plan is in the management section, so feel free to steal my stuff. I actually want you to steal my stuff, because my stuff is designed to make life easier on you. It really is. All right, guys, let's get going. Cav, let's see what you did this morning, my friend. Cav says when everything says up, the triggers are strong, he's going to get in with all that momentum, and he's going to get paid. Cav, absolutely beautiful. And then there's another version of what can be done. That was your entry was my add-on, Cav. So I took 2 contracts down here when I felt safe. Odds favorable, clear path, got on the right side of things. And rather than exiting, I took the pullback and added 2 more on. Made about 600 right there, and then I let the last one, because of the momentum, run to the key area. And guys, that was my whole day in one trade. I waited 2.5 hours for that to set up. And then once it did, I didn't hesitate because I trust my rules. I've been working a lot with my brother, and it's creating some advantages. Whoops. Dwight, I just opened yours, and then I closed it right back out. Sorry about that. All right, so let's look at Dwight's. Where did he go? And guys, I have to scroll up and down in the chat box, so I want to make sure that I don't miss questions. All right, so Dwight, you had tons of momentum, right? The smalls are returning, but everything says up. Your path is clear. You take the pullback to support inside of favorable large triggers. And why did you jump ship? What scared you, Cav? Or Dwight, sorry. So guys, let's talk about trust. Okay. So let's see if we can clear something up. Dwight, you're about to have your mind blown, my friend. You ready? And I'm going to do it in a couple different parts. Which chart defines the direction, the momentum, in the areas? Which chart defines all of the good stuff? 13.2, right? Large chart. So I'm going to start with that. On your small chart, Dwight, if you have odds favorable momentum, on your small chart or on your large chart, if you have momentum, if you have a clear path, do you remember what happens on a smaller, faster chart that can kill that? What's it take on your smaller entry, insignificant refinement chart to make you say, holy crap, it may not do what it's doing anymore? Do you remember this one? 3 divergences? 3 divergences on the small chart may end a trend, right? So one divergence pushed you right back to the best of the best area. And as you come to this mid-band, don't you still have odds favorable momentum? Don't you still have a clear path? Absolutely you do. So wouldn't it make sense that this mid-band inside of favorable large triggers is still a potential entry? But the cool thing is you've already got your risk established. And what was the timestamp on this one? I remember looking at this. Let me go back to the S&P. I think it was this one right here. Let's see what it looked like. So Dwight, you were in, and I want to show you guys, you were in at 94.75. So this was your entry. 94.75. I like it. Which means that you had to get to 96.75 to make $100. And I think you did, right? You made your $100? 96.25. You still jumped ship early. You didn't even let it get to $100. And then at that point, you're break even. And then with that loss of momentum, it comes against you, right? And you're out break even. But you never even gave it a chance. With the momentum, with the clear path, you never even gave it a chance to get to $100, Dwight. And do you know what that is? It's fear. I don't care if you made $150. You jump ship early. You don't trust your methodology, Dwight. You're trading fearful. That's all it is. I know because I've done it. You don't believe that odds favorable momentum is an advantage. You don't believe that a clear path is an advantage. And you don't believe that your kick-ass entry has any bearing on your ability to get paid. All you know is that fluctuations in price scare the ever-loving crap out of you. Dwight, so what you have right now is the most normal thing that people have when they get to that point where they start to see things. You're on simulator, right? And you're scared to death to let it run to $100 profit. You got to change that. You've got to let it do what it does. And guys, this is hard to do. So Dwight, whenever I have people fearful, there's a couple things that I tell you to do. And the first thing, that's everybody's problem. You're not alone. The first thing is do this. Keep it easy. Keep it simple. Take your trades, right? And let the money do whatever the money does on simulator, Dwight. Just let it happen. 100 and 200. Let it do what it's going to do. Dwight, when I went live, after the first account that I blew out, and I didn't blow out an Apex account, guys. I blew out thousands of dollars in a day. But what I had to do is when I went live again, I had that same fear. And Dwight, I would take 25 trades in a day, and I'd be up 19 ticks. And I would let runners absolutely just go without me because I was scared to death of losing. And I was scared to death of losing because I didn't trust the methodology. So when people tell me that they're scared, I ask them, what's your favorite looks? What's your favorite looks box look like? Do you have 100 pictures of your perfect trade, right? Have you spent the time to say this is exactly what it's going to take to get me in and I believe in the advantages and this is what it looks like? Most people don't have this when they trade scared. They haven't gone through the repetitions. They're only focused on the money. And I'm not saying that this is you, Dwight, but this is pretty common. Have you clicked every link in here to see what great entries look like? Are you developing trust, guys? Because trust removes doubt. Trust removes doubt. Trust has me so much at a point where if I'm in this trade, you have to come get me. And Dwight, even if you didn't move your initial stop after the reversal bar, you had less than $50 of risk on that trade. You've got to let these run, right? You've got to let these do it. And simulator is the perfect place to do it. And you're not alone. I can't stress that enough. Fear kills trading. So what you have to do is you have to get to the point that you believe 100% without question that momentum, a clear path, in an entry area provides you a statistical advantage, that it wins more than it loses. And then you got to sit on your damn hands and let it either win or lose. Keep it pragmatic. That's how you fix it. Then stop. Because you're fearful, right? So Dwight, I'm not going to ask anyone to do this, but there's nobody in here that's been funded that hasn't blown out. I guarantee it. There's nobody in here that hasn't hit their threshold. I've blown them out. I've blown out 2 or 3 of them. And it's reasons versus results, right? So you've got to work through your fear. Guys, repetition works through fear. Doing the same damn thing over and over works through fear. We all get scared of losing, but eventually you get so in tune with the advantages that you don't care if you lose. And let me go to the little words of wisdom from the late Mark Douglas. When you stop expecting to win every trade, because I think we've already established that you're not in control, right? You know you're not in control. When you stop expecting to win every trade, guys, stop putting that pressure on yourself. you're going to start winning most of your trades. Don't care about the result on simulator or live. Care about the execution of the method. And guys, this is the same in everything in life. You can hope for the answer for that mathematical equation all you want, but if you don't go through the process of getting there, you're just guessing. You can hope for a birdie, but if you don't focus on your swing, you're probably not going to get it unless you got lucky, and you can't repeat that luck. Dwight, you are in the most normal, natural, 100% where everybody in the world is placed, and I want you to be okay with it. I want you to say, hey, I'm new, give yourself a little bit of grace, but you know what your challenge is. It's not your chart read. Your chart read is freaking amazing. Your challenge is believing that there's an advantage there. So I want you to scroll back. And I want you to circle your entries. And I want you to tell me. Right? Tell me, how often would it have hit that $300? This was a great 50-50 trade. Why no trade here? This was everything that the KISS plan could ever hope for. It means that you also don't trust the KISS plan, because that's a good bottom that created a full reversal that gave you odds favorable, no divergence, strong triggers, and a tiny little window of opportunity. And if there's not a trade here, and you're telling me that you're following the KISS plan, well, then there's a problem. It means that you're creating opinions on whether or not you're willing to take a trade. And that's for everybody, not just him. Guys, catching trades are great. Missing the perfect trade sucks. That's worse. That's what you're talking yourself out of it, right? So does it make sense that it's just a trust issue? How do we battle trust? Repetition. So take your trader hat off for a little bit, put your student hat back on. I want you to scroll back, and I'm telling you guys, this is a drill that I had to do. I want you to scroll back. And then, Dwight, you should have a 2 triggers only template. I don't think mine works. I think I broke mine on accident. But I want you to do this for me. You can do it if you want. It's going to feel like work. I think I just seized up my S&P. I want you to leave nothing but trigger lines on your chart. Give me just 1 second. I broke my stuff. And we're going to start to trust momentum. Oh my gosh, I broke Ninja Trader, guys. Give me a second. I've got to close it out and restart it. Sorry about that. But I'm going to show you how to fix this. And this is the same drill that I did, and it worked wonders for me. And I'm telling you guys, I had to do drills on everything. I had to do drills on every momentum, every termination, everything. So while that's loading back up, I'm gonna knock on a couple more pictures here, and then we're gonna come back and we're gonna continue that lesson to develop trust, guys, because I think that's a big part. Actually, I'm sure of it. It's a huge part for what we do, because if you don't have trust, life gets difficult. It really does. Here we go. Got some charts coming up. Where on earth am I in the scroll up? There's Dwight. So let's go through. Cav, we got one for you. Termination condition. All right. My mistake was to take a pullback into large triggers with the midband. Should have been aware of the termination condition on the 34.5. Lost the trade. That's some of the best chart annotation I've seen. Cav didn't take a loser and say the market sucks. They're against me. This is horrible. It should have went up. I wanted it to go up. It could have gone up. He said, oops, I broke a rule. And that's the result. And guys, this is how you get better. Nice trade, Cav. Well, actually, it was not. It was a rules-breaking trade, but great annotation, great chart. And then JW. All right, are you with me, JW? Thanks, Joel. You're welcome. All right, JW, so let's go through and let's just make sure that we're where we need to be, right? So we are coming from a good bottom. I love that. Termination, full reversal looks amazing. Let's define clear path. And I think that this is going to be this is going to take you next level right now. Are you ready? I hope so, because here it comes, JW. This area of resistance is broken when the small and the large get above it. Are you comfortable with that idea with termination conditions? And this is questions for everybody, not just JW. The only way an area is broken is if the small and the large get to the other side of it, right? That's how we have a clear path. And this is pretty common. You're looking from here to here, and you're saying, I have a clear path. Price hasn't reached the area. Am I right in assuming that? I'll make my arrows a different color than yours. You're saying, man, look at that. I've got a clear path all the way up to the fib. And again, I love watching you guys make the mistakes that I made. But let's go through at the time of your pullback. The large triggers hadn't broken this area yet. The large triggers also hadn't broken this area yet. So we're not trading a clear path yet. What we're trading is the hope that two areas break. It's a 50-50 trade, but it's a 50-50 trade at two levels, 96 and 94. So we're actually hoping that both of these areas break with what appears to be waning momentum. Does that make sense? Are you talking about the colors? I love that. You ready? Hold on. All right, JW, your fib is now hot pink. Did both triggers break the hot pink fib? They didn't, right? Or I can put it up here if you want. Both triggers didn't break the hot pink fib. The area is not broken. Both triggers didn't break the yellow fib. It's not broken. Didn't break the orange fib either. And this is one of the greatest lessons, and I think that we talked about this yesterday as well, is there's nothing written in the rules about the colors of your fibs, only the trigger line location to them. And gosh, I've made all these mistakes. I love this because you guys are on such a great path when you show me pictures like this. And I believe it was D-Rock yesterday that said that his fib turned red for resistance. And he said, well, now I got to go short, right? But his triggers hadn't broken it yet. And JW, I think this is an easy fix. Pull the color of the fib out of the equation and really embrace the idea that it's the trigger location versus the fib that establishes whether you have a clear path or not. And it'll change your world, 100%. It'll change your world. Great picture. I like your attempt at it. And I see why you got stopped out. You had divergence on a weak trigger 50-50, and it just pushed lower. Great picture, man. Thank you for sharing that. All right. I am going to go through this. How do I develop trust drill, guys? And I'm going to get rid of my pro trader, and I'm going to get rid of my divergence potentials, and I'm going to leave nothing but trigger lines on my chart. Mark, I'm trying to develop trust. I'm going to show you how to fix it. You ready? With odds favorable momentum, circle a tail, and it's continuing down. And I want you to scroll back. And we're looking for, there's a little tail, doesn't even have to be a big one, but with odds favorable momentum, I want you to circle a tail. Are you with me, Dwight? I'm scrolling back with odds favorable momentum. All I'm doing right now, I'm not worried about entries. I'm not worried about exits. I'm not worried about termination conditions. All I'm doing is I'm convincing my brain that with momentum, I've got room to make money. With momentum, the market's likely to continue down, right? With momentum, the market's likely to continue up. Do you see what I'm doing here? With momentum, there's a tail, there's a tail. And what you do is you start to believe this idea that momentum leads the way, that momentum gives you an advantage. And then when you get to the back of 10 days after going through that, go the other direction. Weak triggers preceded a reversal. Weak triggers preceded a push down. The smalls returned. We get that indecision Mark talked about. Flat, lifeless, reversal, weak triggers, there's a push, right? The smalls begin to return. Maybe you manage out and it pushes down. Weak triggers give a push up. Guys, all we're doing is we're really focusing on and embracing the idea that when I have odds favorable momentum in one of these tail sprints, that market continues. Does that make sense to everybody? We're developing trust. We circled that one live market, and it's still going down without the benefit of any fibs at all. And I'm telling you right now, this is what my brother would do to me. So I love sharing this little setup, this little drill. And you can do this on any market, right? But if you took that short, and I'm not saying that your rules were met, Dwight, from the time of entry, let me make this a little bigger. One divergence pushed you back, right? And now it's weak triggers. Nothing changes in this until the triggers weaken and it starts to come up. And now it's just a 50-50 right at the mid-band. But what you find is that you start with the momentum and you let the momentum lead the way. And then you start to factor in termination conditions, right? And you let that lead the way. And then once you're in, if I went short on a 50-50 with divergence, my initial stop would be somewhere right here, right? Smalls are through, large are not, no divergence. That was my entry. What changes from bar to bar? I still have odds favorable momentum. And now my small triggers are down. I still have odds favorable momentum. And the market's pushing lower. My risk is established. I've got virtually no risk. I've already hit my first $100. I'm at break even. Nothing has changed on the large chart. Does that make sense? Now my small triggers are down. I love that. And my large chart is still full of kickassery. I'm break even. And my management says if divergence prints, I'll exit the trade. If divergence doesn't print, Dwight, I've got to trust this momentum to push. So one divergence on a 50-50 can take me out of the trade. Until that happens, I am bound by law, the laws of my plan to sit on my hands and do nothing. Does that make sense? So we're just going to let this one go, and we're going to say it either hits the fib or it takes us out break even. And let's just see how far it goes, just for grins. What do you say? We'll come back to it. I'm going to go click on some more pictures. Guys, developing trust is a process. It really is. But it can be done, I know, because I didn't have it in the beginning. These trades scare the hell out of me. Even fake money. And then JW, I believe we saw yours. So let's go to Cav. And then Cav, you had a 50-50. You take a little momentum style when it clears and just take quick profits at the problem. Nicely done, Cav. Just a little chunk, right? You didn't, I guess you're hiding a bar. I don't see a pullback to the one-to-ones. It may be behind there, right? If there's a tail here, brilliant. If there's not, there'd have to be, right? 59? There would have had to be. That's perfect, dude. Let the area break, let it pull back. And guys, that's the exact same lesson that Cav and I talked about yesterday, and the execution was flawless there, Cav. Nice job. Love that trade. And then let's see who's next. Joel, let's see what we have. Odds favorable. Divergences print multiple times. You still take it. I can't help you trust your plan, Joel. You got to trust it. Your rules say divergence on a 50-50, don't take it. Your emotions said I'm taking it because what if this one works? You got to work through that. And then Cav, that's the same one as earlier too. And this is the lesson that we were talking about. What's a good bottom? And this is the one that I wanted to cover, and I hope that this is helpful for everybody. When I talk about a strong bottom, when I talk about a strong top, price reaches an area, triggers don't break. Price reaches an area, triggers don't break. This is a strong top once it reverses. This is a strong bottom once it reverses. This is a strong top once it reverses. Guys, that's the recipe for a strong top or bottom. If it doesn't hit an area and reverses, it can't be a strong top or bottom. Does that make sense, everybody? This becomes very important because what a strong top or bottom does for your trading is it means that price reached a huge key area and the entire market reversed off of it. Decisions were made strong enough to reverse the market. And what happens after these termination conditions when the rules are met is typically a really badass trade. And if you don't have a good top or bottom, things like 50-50s start to fail. And when you do have a good top or bottom, these 50-50s tend to work. So you get this opportunity. Let it be a termination that reverses the market, and that's how we're going to define a strong top or bottom. When the market comes from nowhere, we don't know if they want to get back down to that key area or not. We don't know if they're going to try a second push to get to where they were trying to get to the first time. And then Cav, you absolute rock starred the area in between. But because it's a learning class, I had to talk about the good tops and bottoms. 50-50, no divergence, pull back to the area. And then Joel, that one fit your rules. This one didn't. And you lost, but because you lost this one, you skipped the ones that did fall, that did fit. And this goes back to our lesson on trust, guys. Doing the same thing over and over, doing the same thing because it's a statistical advantage. This one is terrifying, but it fits the rules 100%. This one, you thought you just predicted the breakout, but it didn't fit the rules, right? And that's a pretty real thing, guys. I think it's great when you guys take these trades. I think it's wonderful when you guys make these mistakes because they do work their way into memory, right? They do work their way into memory. And then Alan, everything says down. You take the close on the correct side and it's an easy winner. And I like that. That shows great adherence to your rules, Alan. Beautiful trade. Willing to sacrifice a little bit to not fight those triggers. Such a great move on NASDAQ. That's a NASDAQ thing, guys. And then Cav, same thing. You just grab the continuation of the 50-50 and capitalize beautifully. And this is what I love. Oh, man, I wish I could just reach through and high-five you. Odds favorable, clear path, everything says down. You're like, hell no, I'm not getting out in an area inside of favorable large triggers. And then Cav, that's your add-on, brother. That's where I put all three of those contracts back on for the next run. Does that make sense? I think that's your next stage. You get in for everything's in favor, absolutely beautiful. You take three, perfect. We're in this to get paid. And then when it pulls back up to that mid band inside of favorable large triggers, dude, that's just a 100% rules-based trade. It's okay. Put some of those contracts back on. Put one back on. To read divergence better, what did this divergence do for you? Let's define it. And this is for everybody in the room. What did that one insignificant divergence do on the smaller, faster chart? This helped me a lot, the way I think about it. It pushed me right back to my mid-band, right? Pushed me right back to my mid-band. Thank you, thank you, thank you for that divergence. One divergence doesn't trump this momentum. One divergence doesn't trump this clear path. One divergence gets me right to my perfect entry. And you start changing the way you think about things. I used to see one divergence, Brent, and I'd go, it's not 3. Large chart leads the way. It's not 3. I'm all good. It's not 3. My rules are met, right? Why? So if this divergence forms, you have to take your money. Not this trade. But for example, hold on. How about when this divergence with weak triggers forms on a 50-50, take your money. So it's knowing when to apply we're talking about trust. Just talking about trust. So yeah, Cav, understanding when it's appropriate and when it's not appropriate to worry about a divergence. Off a termination, yeah, that's kind of tough, right? Gary E, favorable large triggers, brother. Yeah, and you will. And go back small chart. Like when you circle right here, go back small chart and start looking at how it works. And take pictures, dude. Take pictures. When you're studying something like this, Cav, pictures are amazing. Gary, large and synthetic work one on top of the other. That's the key look. That's the best of the best look. And it's the best of the best look because it's the smallest window of opportunity. When your large and synthetic split and separate, look at this. At the time of the reversal bar, not only is there a mid-band inside of large triggers, there's also one-to-ones inside of synthetic, right? Which one's it going to go to? Hell, I don't know. But when they're right on top of each other, one on top of the other, it's beautiful. So what I do is I look from the highest line, and in this case, it would be the top of the large triggers, but the lowest line is the bottom of the synthetics, and it's within that area that I'm looking for entries. Does that make sense, Gary? Great questions, kinda. So let's go back and let's do this. Window of opportunity. Reversal bar starts the pushback. At the time of the pushback, look at my red window. My red window extends from the lowest point of triggers to the highest point of triggers. And sometimes they are just from the synthetics. Who's taking those trades, Gary? You or somebody else that isn't in control of your money and your destiny? You're going to see me take trades from the middle of nowhere. Doesn't mean that it's wrong. It just means that it's mine. It means that I've studied enough to understand when I have an advantage. So as a brand new user, your best advantage, and that happens in this classroom, guys. It really does. That's why I always go back to advantages. Cav's at a different place than you guys, and some of his trades aren't going to make sense. And Gary, that's probably what's confusing you. Wow, crude oil sold off, didn't they? Let me pull up Cav's picture because I love his trade. I want to find that long. Look at his entry. It's inside of large triggers. His synthetics are down here. That's not favorable large triggers. But what Cav did, and Cav, I'm going to sing your praises for a second, is Cav said, I've seen this much momentum enough times to know that the small crowd, especially with no divergence, probably isn't going to push it past that large trigger. So Cav has developed, and that's okay, Gary. It's okay. But go back. Anytime you're like, man, that's not the right entry, take a picture. Anytime it's not the right entry per your rules, take a picture. Because I guarantee you there was a time where Cav said these have to be favorable. And with enough repetition and practice and feedback and simulation, he's willing to take this shot with all of this momentum to get to the key area. And it goes back to that trust drill that we were talking about. Go back and circle these tails with all that momentum. How often does it continue to push? Doesn't it make sense that if it continues to push, this may be acceptable? And that's how you grow as a user. That's exactly how you begin to go next level. And you got to keep asking these questions, Gary. There isn't a bad question. There are no bad questions. But for the new user, this is the best of the best. For an experienced user, when the conditions are right, maybe those split a little bit, right? Maybe you fudge on the momentum a little bit. Maybe your entry is a couple ticks above or a couple ticks below. But until you go through the process of really just creating recognition, until you learn how to do it easy, let it be easy. And then everything else just starts to work itself out. And I think Cav just said it right there. In time and practice, it comes to you. You start seeing things that you would have never thought you would ever take. I will never take this trade. And then suddenly you're taking it and you're winning more than you lose because you put the study and the time in. And that's what this class is for, is anytime you have a question about something, guys, ask that question. Don't ever hesitate to ask. Hey, Mark, this doesn't make sense. Can you clarify? Hey, Mark, I know that you said it should be this, but I see people doing that. Why are they doing it? Right? Gino? 50-50, you thought about going short here, decided against it because of the thin support line at 45.7625. Certainly enough room for a trade, but struggling with these. Are you with me, Gino? If you can talk to me about golf swings, let's talk about chart reads. Cool. I want you to do me a favor first. Don't be so constrictive here. Give it a little room to breathe, right? So this was the S&P at 1024. Can we go back and look at my S&P at 1024? Because I want to see all the information, not just some of it. And you'll see what I mean. At 1024, let's see what it looked like. We were somewhere. What time zone are you in? Just to make sure that I'm with you. Because at 1024, it looks like oh, thank you. It's like, man, that doesn't even begin to look like it. That's my bad. I apologize. Hold it. That's NASDAQ. Oh, I don't have an S&P chart. I forgot. My stuff crashed. My bad. All right, let me bring up my S&P. Because some of the things that I want to look at, Gino, when we talk about it, is what did your small chart say? Did your small chart have divergence? If it didn't, that's pretty powerful. Did your small chart have a tiny window of opportunity? Absolutely it did. So there's a couple things that come into play. You're coming off of that mid band and everything very nice. Paul, seriously, great job. 2 trades, daily goal met. I got you beat today, though. 1 trade with an add-on, daily goal met. So, Gino, when we talk about it, I learned it by watching you. You guys don't know this, but you guys make me a better trader all the time. Gino, do you recall whether or not you had divergence on the smaller, faster chart? I've got it coming right now. I'm almost there. Ron, now you're just showing off, man. Nobody likes a bragger. Just kidding. Okay. I'm gonna recreate your picture, Gino. at 1024. I would not. I think I broke my 13.2 chart. I'm going to build a new one real quick. Sorry. You guys have time? I have time. Let's go. New chart. S&P. We'll build a 13.2. Tea time's not till 12:30 today, so nothing but time. 13.2, and I'm going to go 10 days back. All right, that chart will be right up. And then once it comes up, we're going to go back to 1024, Gino, and we're going to look at the whole picture. Because some of the things that I want to point out is you don't describe the advantage on the large chart. You don't describe where it's coming from. You don't describe the momentum. You don't describe whether or not 81 yesterday. We were like 72 here. For a second, I just assumed that you meant you turned 81 yesterday. I was going to say happy birthday, Grandpa, but oh, you shot an 81 yesterday? Do you really golf? What did you get on the back nine? You're a better golfer than I am. All right, 1024. All right, so 1024. This was it right here, Gino. There's no known issues on why you shouldn't. Gary, I know that my brother downloaded it and didn't have a challenge with it. All right. So, Gino, I'm going to do your chart the way I'd like to see it. And I think what you'll find is this is going to help a lot. So let's identify some advantages first, right? I have odds favorable momentum. So far, so good? And then, Gino, what do we know about this look? When the small triggers break through, but the large triggers don't. Are you comfortable with 50-50? Area with potential to break, but not a clear path. With me so far? Not really? Okay, so thank you. So let's do it real quick. Let me pull some arrows and let me show you exactly what I'm talking about here. When I talk about a 50-50, Gino, when I'm talking about area with the potential to break, but it's not broken yet, I like white arrows. My small triggers have come through that area, right? This is the area in question. My small triggers have come through with reckless abandon and tons of momentum. Do you see that part of it? And you're thinking, dude, this looks like a good short, right? And then you tell yourself, but my large triggers haven't made it through the area yet. This is the area in question. This is the area that we are in the position of hoping it breaks for more down because of the momentum. Does that make sense so far? And this is classic. This is a 50-50 trade. This is a medium probability trade because until this area breaks, it's not a clear path, which means that we've gotten rid of one of our biggest advantages. Is everybody with me so far? This isn't just Gino's lesson. This is for everybody. This is not one that looked promising. Why not? Because your gut told you, or because you have a set of rules maybe that says if divergence prints on a 50-50, it can sour that trade. I'll tell you right now, and I'll put this right here. My guts lie. My rules have been proven. My opinion means nothing. So it doesn't matter to me whether I think this is a great 50-50 look, whether I think that well, this is the one that's going to work and maybe the next one won't. Keep it pragmatic, Gino. Keep it very focused, right? If divergence prints on a 50-50, it just might not be your trade. And I agree with you. 50-50 with a divergence. Why was it evident? You have no idea. Just admit and be okay with the idea that you have no idea. It is now. Exactly, right? It's evident that these triggers aren't going to break. Bullshit, it made it to the next one. It's evident this market's going to continue up. No, it's not. Somebody made it go down. It's evident that this should break. No, it's not. And I'm not knocking anything that you're saying, Gino, but what I'm saying is opinions are going to get your ass kicked more often than they don't. It's not evident that this area is not going to break. In fact, just based on the large chart, I would say it's got a better chance of breaking than it doesn't. But when I go to my small chart for the tiebreaker, it says, hey, Mark, your rules, which have been proven, say don't try this trade because divergence printed on a 50-50. Does that make sense, Gino? And this is kind of where everybody should be trying to get, to where you have this plan that doesn't revolve around your emotions, your feelings, your wants, your wishes, your hopes. It revolves around, well, were my rules true? And if they were, take the trade. And here's that 50-50 trade rules. Notice that it says no divergence on the 5-1. Notice that it reminds you, divergence, no trade. And notice in management it says, if divergence prints, exit the trade. So I guess the point I'm making is when I see your 5-1 and I see the big picture, I love that you didn't take this trade. But if all I'm looking at is this, that's an area with the potential to break. Does that make sense, Gino? Does that help a little bit, I hope? And then I want to go to crude oil real quick. Where was the 50-50 without divergence? Hey, Dwight, this was your rules-based 50-50 without divergence right here. The one that you weren't allowed to second guess or jump ship on. What did it do? This is how you develop trust, my friend. Thank goodness we didn't jump ship, right? Thank goodness. We didn't get out of that trade. And where's our entry? That was your entry right there. And where did it go? All the way to the freaking fibs and beyond. But that was 100% rules-based, wasn't it? Did anybody in the room catch this short and crude and say with all that momentum? Alan, nice. And this is what we do, guys. And this is, I think, a really great example is you have to know why you're doing what you're doing. And it has to be repeatable and it has to be proven. And Gino, you showed a great example of how an opinion may keep you out of a great trade, right? Joel, how an opinion... Where was it? I'm closing things out. How an opinion might get you into the wrong trade, or how an opinion might keep you from taking the perfect trade. And just keep it pragmatic, guys. Keep it focused on either my rules are met or they're not. And if they're met, you're obligated to take the trade. And if they're not, it's totally cool to sit on your hands and do nothing. All right, Joel. Joel, where's your entry? 01? 61. All right, so Joel, this would be the time where I tell you It's time to run a lap. It's time to take a deep breath and just because you're a better chart reader than this, how many trigger lines went through your divergence high? Are your large triggers through this area of resistance? Did you have divergence on what you thought was a 50-50? Did you really have odds favorable momentum? So do you see how, and guys, this is normal. Joel, you got tired of waiting. Is all it is you just got tired of waiting. I think one of the best things you can do when the market isn't giving anything, guys, is stand up and walk away from it for a minute. Because you convinced yourself that there was a trade to be had here, and there just wasn't. It's a great post. And Joel, I've been there with you, my friend. I've blown out accounts through frustration. But these are the ones where you take a step back. And Joel, if I showed you this picture right now, out of the heat of battle, you wouldn't say felt good rules met, would you? You'd say, oh, Mark, let me teach the class because this is a great lesson on termination conditions. I just fudged my rules a little bit. And this is what you have to remember. Mistakes are okay. That's how you learn, exactly what Paul said. But this is why we come back and we study our charts. Because if you stop at felt good, rules met, and you never come back and revisit this chart, Joel, then the market's a jerk. And your plan maybe isn't working the way you thought it would, and your rules might not be good, right? But if you go back and you go, oh, wait a minute, okay, I missed that. That makes sense. I know better than this. Let me put a little note on a piece of paper that says, hey, watch those divergence highs. They can stop a market. And then you just move forward, but you don't leave the day feeling dejected that your rules don't seem to be working. You go back and you reanalyze with a clear head, without the emotion, without the pressure, and you say, oh, I get it now. I think this is a brilliant picture. I learn more from my mistakes than I ever do from my victories, guys. I learn more from my mistakes than I ever will from the easiest trades, from the simple trades. So, Joel, thank you for sharing that. Alex G. Whew. Termination. And then there's that 50-50, right? With no divergence. Alex, did you catch our fake out breakout talk this morning? When the markets are consolidating, you're welcome, Joel. I'm here for you every day. Alex G, are you in here still? I'm looking. Cool. And this is just a great example of that. When a market's been stuck in consolidation, man, this is the one. It either loses quick or it runs forever. But you see that a lot in consolidation, guys. You'll see that 50-50 trade that fails almost instantly out of consolidation. And when it works, it's amazing. But these lose more than they win. This is a 50-50 that I don't take personally. I'm not telling you what to take or what not to take. But you have to expect this, Alex. If this one goes and you took it perfectly, if it goes, it's rock star to the next level. But after this much consolidation and the huge fight, this is kind of like poking the bear with the stick. These are the sellers going, oh, they're going to let us go. They're going to let us go. Add contracts. And the buyers go, ha, just kidding. And they push them right back up. So it's if you know what you're up against going into these trades, these losses don't bug you. And I don't think I would have let it gone much above the fib. I don't think I would have held quite that long. Personally, but that's the perfect 50-50 setup. That's just one of those patterns through repetition that I think we begin to recognize, and I'm happy to be able to share that with you guys, to be able to point that out and let you know that 50-50s after big moments of consolidation are either one and done, that's all you have to do for the day, or they stop quick. And then Paul, everything says up, so you take a pullback to support at those triggers, and you said bingo, that one made it. So that's one, 47 to 49, 7 points. That's a pretty easy one, isn't it? Oh, we saw that one. Oops. And then Gino, you want to put a bid right here. You realize there's not odds favorable minimum, but it looks like a bounce off resistance is occurring. I'm afraid to miss this, but I realize the name of the game is reacting to what is, not what should. When you say put a bid in, Gino, help me with this. Does that mean go long or short? I don't understand the bid. Does that mean go long or short? So you wanted to go long. If it pulled all the way back down, you were saying support that held, that caused divergence, trend change, everything. Right on. I think that, and again, these are two different times. That's 48. As it was coming back here, it was already on its way up. That was that 50-50 that failed. I would be looking somewhere more up here on the right side of everything. Does that make sense? Rather than hoping it comes all the way back down, if you get that twist and everything, maybe there's an opportunity up here. And this is just kind of a mixed bag. It's exactly what you said. What I think should happen compared to what is happening, because what is happening is 45.79 through the rules of termination conditions may stop that market, even though it's red, right? Because every trigger's above. You just don't have the momentum to push it up yet. And I think it did go up from there. I think it was a great read. Well, and that's where it's dangerous, right? Woulda, shoulda, coulda. I could step into the room with Mike Tyson and get one lucky shot in, drop him, right? Fluke, absolute fluke. But the next 873 times I get in the ring with Mike Tyson, he's going to turn me into pulp. Luck is a horrible way. Wear earmuffs. Luck is a rough strategy, and it rarely repeats itself. I liked your line of thinking. And then, Joel, type it in the room, Joel. I know what I'm doing. I know what I'm doing. Beautiful trade, Joel. You're an amazing chart reader, and you're just human, and there's a little bit of patience issue there. Pineski. Everything's down. The divergence prints, it's weak. There's no areas inside. You're just going to try and take the tail end of that trade, and it looks like it worked out for you. And then, Gino, this is kind of the opposite direction of what you were talking about, right? All the triggers, if it pulls back, doesn't it make sense that it's likely to hold with every trigger below it and down? Paul knows that. And Paul says, I'll take it. Let's make some money. It's a nice trade, Paul. Didn't have the area inside of favorable large triggers, but you had the chart reading wherewithal to know what was up. And then, Joel, you took the same trade, right? Exactly what I just talked about. You're letting your chart reading, you broke your rules on the entry, but you took a beautiful trade based on direction, areas likely to hold. Nicely done, Joel. That's just the next step, guys. Getting outside of that simple. And then Cav. Good top, everything rolls, tons of momentum. You take the pullback, and down it goes, huh? Sure enough. Beautiful. Great tops and bottoms, guys. They set the tone. Great tops and bottoms give you such an advantage. Cav, you crushed it. Nicely done. Thank goodness for that divergence, right? Thank goodness for that divergence. Michelle, you take whatever lane you want. That divergence got you right back to your entry, brother. Nice job. Having fun today watching you guys trade. Bobby, same thing, right? Great top, tons of momentum. Everything says down. You're like, I'll take that trade. And you get paid. And Ron gave you a chili dog. That's how you know it's a good trade, when Ron gives you a chili dog. And then going back to it, right? You take the long trade into a termination. And then, Cav, this is twice today so far that 1-to-1s have killed you. Right? That's twice today. We're starting to see a pattern here. That's okay. I like it when that happens. And I like it even more that you said, oh, that's not right. And then when everything pointed down, you didn't miss it. You take your little momentum, let it break, let it pull back. You even added on to it. And then, Cav, once again, let me see if I can make this smaller. Whoops. I'm telling you, you're so good at this, you're gonna start doing this. Odds favorable, clear path, resistance inside of favorable large triggers. Cav, you're gonna hit a point in your trading where there is no way on God's green earth you're not gonna add on. And guys, if you don't catch the first move, that was your second move for easy money. Nicely done, Cav. And then Bobby T caught it. Absolutely perfect. Making all the money. And then Pineski. Odds favorable, 50-50. Too much risk to go with the fib. Don't care if it goes from here. You only want that smaller risk. I love that. And this market's a little exhausted, but little outer band trick there. Nice job, Paul. Great trading today, dude. How many trades do you think you pulled out of your day by trying to keep it simple? And Cav, you're doing great. I can't stress that enough, man. You are doing out freaking standing. All right, Miss Michelle. Half as much, maybe a quarter. All right, today's lesson, and I haven't done this in a long time, guys. I'm going to do this. And I hope this doesn't sound like scolding. Be careful with your language. Because if you type missed this on the NASDAQ, missed this trade should have been mine, but it wasn't. This is what sets up people to start taking trades that they shouldn't take. And I hope this makes sense. I missed it, so I have to make up for it. I didn't catch that trade. That was my trade. Even though I wasn't in front of it, now I got to go make some stuff happen someplace else to make up for that trade that I missed. Does that make sense, everybody? Be careful with your language. Your body believes everything that you say. Sorry, that's my little soapbox. And then everything is down. The path is clear, but the momentum isn't the best. And you say, but with this look and this, oh my gosh, I know that this is the area. And I love how you did this, Michelle. And we had a great market flow lesson yesterday. See if I can make your chart a little bit bigger. Whoops, wrong way. It's not letting me go bigger. It's actually making it smaller. Weird. All right. You guys remember yesterday when we talked about market flow, and it's only a confirmation, right? Everything is down and the path is down and the path is clear and the triggers are down, but it's not the best momentum. And she knows that if it pulls back to resistance inside of favorable large triggers, Gary E., here's one of those instances where that's not your entry, brother, right? You're like, whoa, that's outside of favorable large triggers. What's this crazy lady thinking? The crazy lady was thinking, based on chart reads, that this area is likely to hold based on the trigger line location. But she doesn't know if it's going to be the mid band. She doesn't know if it's going to be the fib. She doesn't even know if it's going to be this fib up here. So she turns to another chart and she says, you know what? I'll wait for some confirmation. It's not the perfect trade. Let me wait for just a little bit of confirmation to get into this trade. And then, Michelle, you do it beautifully and you pay a price for that confirmation. But then you're committed to the trade and you get paid all the way down. Hey, Cav, take care, man. Have an awesome afternoon. And thank you for posting as much as you do. I don't know if I've said that. Thank you for posting as much as you do. You give us so many incredible lessons in this room. And I truly am thankful for you in that regard. Thank you. So, Gary, does that make sense? That's not your entry yet, right? But I bet it will be one day. You just have to get to that point in your path. And Michelle, this is beautiful. You had every advantage. Great trade. Was it easy, Michelle? You are, Joel. You're doing great. What I find is when you're comfortable with the patterns, guys, the trades feel easy. And they feel pretty effortless. Not straightforward, a little risky, and that's why you waited for confirmation, right? And then how nervous did you get when it fluctuated right there? Oh. The one closest to price, Gary. Hand sweaty. So, Gary, if it's a short trade, it's your lowest one. That's it. If it's a long trade, it's your highest one. And it doesn't matter what it is. It doesn't matter if it's a fib. It doesn't matter if it's a mid-band. It doesn't matter if it's a one-to-one. It's just the closest one. And Gary, one of the greatest things ever, and I love that you're asking entry questions because I think entries really define how your day is going to go, is there's going to be times, you too, Joel, where they're stacked and it just makes you feel better. You're like, oh my gosh, I've got 1, 2, 3, 4 of them inside of those favorable large triggers, right? I've got, let's see if we can find another one. That's the same one. I've got a mid-band and one-to-ones in the same place. So when I see these start to come together at the same spot, oh, I like it. But thank goodness I didn't give those one-to-ones precedence over a mid-band because it ended up going from the mid-band. Does that make sense? I hope so. Good. Thank you for asking questions. I have found in my experience that everything is fixable, guys. Conversations fix everything. And I used to manage restaurants like that. There's nothing that can't be fixed with a conversation. But I need you guys to initiate it because I can't see the confused look on your face. All right. This was RJ, right? First post? I love it. Odds favorable momentum. You're absolutely right. Clear path. Room before any termination. 2 for 2, RJ. Your sell limit goes just below resistance inside of favorable large triggers. And then you bought it back. You exited your position at the one-to-ones. Let me see the price on those one-to-ones. $79.50. $79.50. Why not, RJ? I mean, I love that. $79.50. What an amazing trade. 30 points is $600. Do you see all that momentum? It made it to the fibs. But the only thing I'm worried about is that box that you just put right there. Because what you just did is you just proved to yourself that it does work. And you just identified exactly what it should look like. So what I think you should do is take this picture and go to your spreadsheet. And I want you to start this habit now. And I want you to put a link in there. Because I want you to look at this picture tomorrow so you know what to do. And RJ, day one first post, you just made the Hall of Fame. Because that's everything that I talk about, 100%. I could teach a lesson on trend trades from your picture, which means that it is learnable, right? We just got to eliminate our opinions. Nice job. All right, Gino, pull back to an area, odds favorable, momentum, hope it works. Let's see. Large chart says odds favorable, momentum. Large chart says 50-50 on the fib, right? Just like the last one. Let's go look at the S&P. What's not working about it so far? Okay. So there's a couple ways to look at this. It's a 50-50 trade. And I'm not going to put bad juju on you. It's a 50-50 trade. You took the perfect entry. You defined your trouble spot. I would have been paid right there. What do your rules say about two divergences on a 50-50? I don't know what's going to happen. But do you have a set of rules that talk about two divergences on a 50-50? Manage your trade. We'll talk about it after. Paul, 50-50. Paul says he'll get back in on a 50-50 with two divergences, but he'll do it at the pivot stop out. So there's a couple different schools of thought, right? And that's actually the Pineski. You have to know what you're up against. The area hasn't broken yet. I've got two slowdowns. So what are the pros versus the cons? How much money are you willing to risk hoping it breaks? If you took the first one, you got paid. I hope you took money on it. If you took the second one, you have to have an if-then. If this happens, then this happens. My rules say if a second divergence prints, I exit. Hey, Ron, thank you for being here. Give lessons. You give it adjustment. No, you're good now. You got crab legs to eat. That's a good day. That's a good day. And naps to take. I do love a nap. We'll come back in a second. We'll see what that one did. I don't want to feel like I'm putting juju on anybody. Here's crude oil. Crude oil railed all the way down, and it hit Fibonacci support with weak triggers, and they didn't break, which means nobody else was going short, right? And then that bounce came all the way to Fibonacci resistance, all the triggers are below, nobody went long yet. Well, Ron did to get to the reversal bar marker, but and then it came all the way back, and now it's at support. And there's that 90%. This look on gold you feel like is for suckers? And then here's a termination that created a full reversal that's giving odds favorable momentum. That's kind of my best look. Is this the gold one where you should, did you show it yet, Paul? No. Let's see your picture. I don't have a gold chart. There it is. No, I don't do gold. That's a great look. Odds favorable, clear path, area inside of favorable large triggers. Shit, that's everything I hoped for. I like it. And I like that it's clearing your mid-band because from a bad bottom, isn't that a good spot for a bounce? Where's your window of opportunity? Ooh, Gary E. Let's use Paul's picture for a lesson. Just a little reinforcement. So I'm looking from the top line to the bottom line, right? Let me make that a little bigger. And then from there, I'm looking from the highest point of support, the one closest to price, to the lowest point of support. Does that make sense? So this right here represents the window of opportunity. This is where the market is most likely to bounce. And see how I located it inside of the triggers. That was a great example. Thanks for the picture, Paul. And this is just that repetition. Yeah, absolutely. You just have to see it enough to start to trust it. And then check it out, guys. 2 divergences on a 50-50. Off it goes to the races. So, Gino, hopefully you didn't lose a lot of money on that one. Paul, hopefully when it got your stop or got your entry, you didn't lose a lot. So, Gino, do you have a plan for a 50-50 trade that doesn't revolve around your guts? Just asking. There are no wrong answers, guys, when I ask you a question. And I apologize if I ever make it. Okay. And you want to be short here? Why? What if this area that couldn't break and these 2 divergences that made your trade fail, what if this is the beginning of a bottom? What if this was just overrun and this market's going to go up 1,000 feet? Or 1,000 ticks, I guess. It doesn't? Okay. We'll see what happens. 2 divergences on an area that hasn't broken? Well, that's a red flag for me. That's such a red flag for me, Gino, that I wrote it into the most simple, basic approach to trading areas that haven't broken. And it's such a red flag for me that it shows up once, twice, 3 times. Large trigger never got through, brother. Never did. Large trigger never got through. It tried to, didn't it? So let's see what happens when we hit that fib, if we hit that fib. And it may take a while. Pedro, large chart still says down, absolutely. So, Pedro, let's walk through it. Background's red. Down, right? You're only looking for rules to be met for down trades. Do you have odds favorable momentum? I like it. Small's below the large. That's pretty. That's my first advantage. What about a clear path, Pedro? Do you have it? Do you have a clear path? Do you have small and large triggers through the area letting you know that it's more likely to go to this one? I don't. Maybe you're no. So if I don't have a clear path, this right here, this is my tiebreaker. If I don't have a clear path, I'm not willing to forfeit this loss of momentum, because does everybody remember how the small chart can show change before the large chart can? The large chart can show you things are changing. 2 divergences isn't a deal breaker. But 2 divergences without a clear path is very much a deal breaker for me. So, Gino, I like the idea that you're saying, man, if I get here, I want to go short because all the triggers are below. Hey, J Page, good looking test. But if all of your triggers are below, the area might hold. But you're not going to have odds favorable momentum anymore because look at your small triggers turning against it. And you're not going to have any areas inside of favorable large triggers. And you're going to be fighting the immediate momentum. And what area are you going to try to get to? Are you going to try to get back to this one? Or are you still going to hope that this area pushes you down? And this is kind of how my brain works. I'm not going to arbitrarily go short. I'm not going to arbitrarily go short at resistance. I'm not going to do it just because I hope it works. I'm on the wrong side of everything. I'm on the wrong side of everything. And now I have a loss of momentum down here as well. You can do whatever you want. But this is an opinion. Do you have momentum, Gino? I love this. I love these comments. So you're saying, well, now the triggers are through. But now you don't have any momentum. You even have a visual loss of momentum. So now we're sacrificing rule number 1. See how that works? And I'm telling you, you have to believe, guys, this is the hardest thing you'll ever do. You have to believe that when stuff isn't lining up, that it will. Eventually, Gino, it's all going to come together. And when it does, it's going to be beautiful. And it's going to be easy. And it's going to be effortless. And it's going to give you these advantages. And it's going to set you up, right? So let's golf analogy. Gino, if you know you only hit your driver 225 and you have to carry 240 to keep the ball safe, you know you can't hit that driver. You'd play tennis. See, and that just killed my my self-esteem. I can't hit a driver to save my life. Well, I can. I can't yet. I need to come to you for some lessons. But do you see how when you get to the area, now the smalls are up and they're breaking above the large? And you may get a little bounce off of it. But now you don't have any areas inside of favorable large triggers, and your small triggers are up and on the wrong side, and the trend is up. And it's just, it's nothing more than hope at this point. It's kind of, I sure hope this works. And it may. But how often will it work, right? 2 trades a day? No, not necessarily. That was an easy rules-based winner. I remember that one. There may be today. Yeah, S&P's not giving it a lot today. That might have been one. For high probability trend trades? Yeah. But Gino, how long are you going to be shackled to high probability trend trades? How long are you only going to take that one trade, right? So if we add in 50-50 trades, more opportunities to make money, but you still have to follow some rules. Who trades S&P and made their money today? Anybody? Paul, you took one on the S&P, didn't you? Got paid. Guys, sometimes the S&P isn't giving it up. And you have to go to something like crude oil. And crude oil creates opportunities, right? And crude oil gives you opportunities to make a butt ton of money. That's a technical term, pardon my French. Right? We saw this one live in class, and we let it run all the way down to the next fib. And Gino, if from 70.15 to 69.75 doesn't pay your bills, add a couple contracts and take the same perfect trade. It's not about taking all the trades, guys. It's about taking the best trades. It's about taking the ones with the highest advantage. I wonder if those up triggers and sketchy spot, I don't know. But I guess what I'm trying to say is do whatever you want to do, but make sure that you've tested it, that it's repeatable. Make sure that it creates a statistical advantage. So Gino, I loved your trade here on the first entry. And I think that what we have to do is alleviate hope, if that makes sense. Is keep your management very, very focused and if then pragmatic until you can read your charts well enough in the moment to know when it's time to jump ship. Does that make sense? Because if you took the first short, you made money and there's no reason to not be break even. There's no reason to ever take a loss on this look unless it just runs through your first entry. Does that make sense? Because your entry was awesome, if I'm not mistaken. Your entry, whoops, I closed everything out. Let me find it. And then we're going to call it a day because I got to go to the golf course. Your entry was rock star, dude. You were in at 72, which means it went all the way down to 68.75, which means that you could have made $100 easily, that you could have gone break even plus a couple easily. Does that make sense? So your entries are great. That's the first bite of the elephant. But now you go back and you study this one. You say, well, how do I manage it? Same way as a high probability. But check this out. $100 for the first or at the first trouble spot and then break even. And Gino, if you held for the first trouble spot, which was the divergence low, you made about 150 on that trade and then went break even. So it's just a little management issue. What's that? You can't go long because you can do whatever the hell you want, Gino. Do you want to go long without momentum? Do you want to go long into a termination condition? What do your rules say? My rules say just go throw the money in the driveway and burn it. It sucks, but sometimes, no, green is only telling you which way to look, right? Green doesn't do anything more than tell you which way to look. Momentum, a clear path, and an entry area tell you when it's time to get in. Gino, 90%. Did you see this picture earlier? I do this one every day, but I'm not sure. Thanks, David. I do this picture every day because I believe that this is the biggest challenge that we all face. Termination says don't go short. It's doing not a darn thing until there's something to do. That's what makes successful day traders. It's all of the opinions that we let go of. It's all the hopes and the wishes. Those are what set us. Those are what set us back. They really do. Gino, I waited 2.5 hours this morning for my trade. 2.5 hours I waited for my trade. When my trade was done, I was up $1,000. I'm done for the day, and I'm going to swing clubs in an hour. That 2-hour wait, that absolutely nothing to do. Every second of it was gold. It was money in the bank. It was me not taking unnecessary chances. And then that 4 minutes paid huge dividends. 4 minutes compared to the 2.5 hour wait. And there's days where I don't believe it. And I screw it all up. And you will too. But having a plan helps. And guys, I think that's it for me today. I think it was a great day. I think we had great questions answered. I think the market gave us a lot of great lessons. And I think that when you stop looking for everything and you start looking for the best, that's what kind of builds that patience bone a little bit. and developing that trust. So, guys, thank you so much for being here. Thank you for your participation, for your comments. Thank you for taking the time to be a part of this. And David, yes, sir, I am back in Texas.